Good morning, everyone. For the record, my name is Ruti Lijen. I am the chair of the Boston City Council Committee on Civil Rights Immigrant Advancement. This hearing is being recorded and is being live streamed at boston.gov/city-council-TV and broadcast on Xfinity Channel 8, RCN Channel 82, FiOS Channel 964, and FiOS Channel 964. We will also take public testimony at the end of the hearing. If you are interested in testifying, please email ron.cobb@boston.gov for the link. If providing virtual testimony, please make sure your username is your first and last name. Please state your name and affiliation / residence and limit your comments to a few minutes to ensure that all comments and concerns can be heard. Today's hearing is on docket number 0164, Order for a Hearing on Discrimination in Lending and Appraisals. We are joined by the administration, Robert Terrell, Executive Director for the Office of Fair Housing and Equity, and Karen Rabaza, Deputy Director at the Boston Home Center. We're also joined by a stellar panel of advocates. Joining us this morning is Justin Steele, is that correct? Associate Professor of Law and Urban Planning at MIT. Thank you for being with us. Tom Callahan, Executive Director of the Partnership for Financial Equity, formerly known as the Massachusetts Community Banking Commission. Whitney Demetrius, Director of Fair Housing Engagement at Citizens Housing and Planning Association, otherwise known as CHAPA. Hillary Pizer, Associate Executive Director at Massachusetts Affordable Housing Alliance, MAHA. Jim Campen, Professor Emeritus at UMass Boston and former Chairman of the Board of the Fair Housing Center of Greater Boston. And Sharon Cornelison, postdoctoral fellow at Joint Center for Housing Studies at Harvard. Thank you so much for being with us, and thank you also to the administration for being so gracious and allowing us to start with our advocate panel. I called this hearing order last year as we all see the reports and the articles and the data about how expensive it is to live in the city of Boston for so many of our residents, about Boston losing its Black population, and a lot of that being due to the cost of housing. But it's not just the cost. We know that it's discrimination that our residents and our Black and brown residents face in the process of trying to obtain the credit necessary and the financial support necessary to become homeowners. A major element of the American dream is a home of one's own in the neighborhood of one's choice. However, the story of the American dream, home ownership, and the lending necessary to get there is incomplete without looking at the people, primarily Black and brown folks, who have been historically and systemically blocked from being able to fairly access our lending institutions. We know that federal law prohibits discrimination in the home buying process as stated in the Fair Housing Act, Equal Credit Opportunity Act, Community Reinvestment Act, and Home Mortgage Disclosure Act, HMDA. Ideally, all home buyers must be treated equally by real estate agents, lenders, appraisers, and brokers, but we all know that that isn't happening. Being denied a mortgage means losing access to an important source of generational wealth in our society, a place of stability, a place of predictability. Just as being charged a higher interest rate siphons intergenerational wealth, and appraisal biases perpetuate legacies of redlining. What the data shows, and what I believe our esteemed group of panelists will present, is that Black and Latinx applicants of color experience loan denials and appraisal discrimination at disproportionately higher rates compared to white populations, even when we control for credit risk factors and access to capital factors. Given the scale and breadth of the wealth disparity between Black and white families as researched by the Federal Reserve, our existing fair housing enforcement mechanisms are not enough to guarantee equal treatment or equitable results. But we aren't helpless, and today I hope to reach beyond the problems we face and begin to tread on the long road of systemic policy interventions, such as increasing the number of testers who are able to find and combat discrimination, increasing down payment assistance, access to low and moderate income loan products, special purpose credit programs, strengthening the Massachusetts Community Reinvestment Act, and expanding the ability of relying on non-traditional mechanisms to show consistency in payments during the underwriting credit process, creating inheritance and discrimination loan funds, and perhaps resurrecting the City of Boston Municipal Banking and Community Reinvestment Commission. And following up on the work that was started by the city's own linked deposit ordinance to make sure that we are doing business and supporting the banks that are supporting our communities. So with that, I know that I have colleagues who are coming, wanted to get us started here, and I want to turn it over to our panel. I know that Professor Justin Steele is on a time crunch. Thank you for being with us right before your class. I'm going to start it off with you. Each panelist is going to have 5 minutes for an intro, and then we will turn it over for questions. So thank you. Professor Steele, you have the floor.
Great. Thank you so much for holding this hearing and inviting us all to testify today. I will be very brief. Obviously, as you stated, the wide gap in homeownership by race in the United States, in Massachusetts, and in Boston is a driver of racial inequality broadly. In Boston, 44% of white households own their homes, but only 31% of black households, 30% of Asian Pacific Islander households, and 17% of Latino households. And this has broad effects on, as you said, the intergenerational transfer of wealth, also on other dimensions of health and well-being. So it's a crucial factor in racial inequality. There are many different factors that contribute to this gap. One is the gap in household income by race in the United States. An even more significant factor is the gap in household wealth by race in the United States. But there are things that we can do about this, as you said, in terms of down payment assistance, interest rate assistance, and other programs like that. Another factor that is contributing to these gaps is, given these differences in wealth and income, the role of housing affordability. And so we've seen housing costs in Boston increase much faster than median incomes. And so that has pushed many households, many moderate income and low income households out of the ability to purchase a home. And housing prices have grown most for the lowest quintile of homes and grown least for the highest quintile of homes. So like so many other things in our society, the rising housing cost is having its most negative effects on low and moderate income households.
Can you repeat that statistic just so that I can?
Sure. So home prices have grown most for the lowest, the most affordable homes, and least for the highest cost homes. So it's disparately affecting low and moderate income homeowners. And then some research has found that black households have a higher homeownership rate and a lower gap in metropolitan areas where there are more building permits per household. But that's an issue that we're facing in greater Boston, is that there's not enough housing production, especially outside the city of Boston, where restrictive zoning drives up the cost of housing. Another factor that contributes to some of these disparities are differences in credit scores. We have come to rely on credit scores so much for risk-based pricing in lending, as well as in many other dimensions of life, but there's about 21% of black consumers do not have a credit score, compared to 12% of white households, and that's largely because they don't have
20% for
because they don't have extensive enough record of transactions. It's not because they it's not because of some mistake on their part, but because of the way the credit score system is designed, and also because of the ways in which communities of color have historically been and continue to be excluded from a number of mainstream financial products. And people have skepticism sometimes of these financial products. Credit scores are also associated with race, not just the presence or absence of a credit score, but the actual credit score itself. The median FICO score for white households is 126 points higher than the median FICO score for black households. And so that affects both access to mortgages in general, but also the cost of the mortgage, the interest rate of the mortgage. And so that further extracts wealth from communities of color. And because credit scores are based on things like the quality of credit, which is shaped by location, because we have a largely two-tiered, separate and unequal financial services sector where we have a prevalence of mainstream banks and access to mainstream banks in some neighborhoods, and then a flooding of check cashers and rent-to-own businesses in other neighborhoods. It's completely predictable that credit scores will be associated with race and will adversely affect those who already have the least access to financial services. All of this, as I said, not only affects access to mortgages, but also the cost of mortgages. So black home buyers in 2019 were charged 13 basis points more for their mortgages on average than white borrowers. And then for outstanding mortgages, the gap in interest rates is even higher because there's a disparity in the likelihood to refinance when rates are low. So this means that Black and Latino borrowers are paying more for the same access to credit. In terms of appraisal discrimination, this is not an area that I research directly myself, but there's extensive research that establishes that for Black and Latino home buyers, their homes are more likely to be appraised at below the value at which the home actually sells for. So one of the leading studies is by Freddie Mac, the Federal Home Loan Mortgage Corporation, in 2021. And using more than 12 million appraisals, they found that properties in tracts where the majority of residents are Black or Latino receive appraisal values lower than the price at which it actually sells. That happens 7.4% of homes in tracts where the majority of residents are white, but more than double that rate, 15.4% of homes in tracts where the majority of residents are Latino, and 12.5% of homes in tracts where the majority of residents are Black. So all of that is strong evidence that there is either conscious or unconscious bias in the appraisal process. And there's other studies that have replicated this, including by Freddie Mac also looking in a smaller sample where the race of the actual home buyer is available, again finding that 9.5% of Latino applicants, 8.6% of Black applicants receive an appraisal value lower than the sale price, compared to only 6.5% of white applicants. So what to do about this? I think there are many great ideas. I'll just share a few. I think one really important component, as you said, is different forms of down payment assistance and potentially assistance that recognizes the histories of discrimination in access to home ownership and financial services that households have experienced in Boston. The program One Boston, I think, is a great start, but other programs that have forgivable down payment assistance or interest rate assistance. And also, I think it's important not to neglect the importance of outreach regarding refinancing for those who are able to access a home, since that does really drive the higher cost that a lot of Black and Latino households face. And I think it's important to also challenge the dominant role of credit scores and risk-based pricing. I think the benefits of risk-based pricing to lenders is not always directly related to actually the risk of default. For instance, in refinance loans, if the person is refinancing a loan and they've been making their payments consistently, and they're refinancing into a loan presumably on better terms, how relevant is a credit score in that context when there's already proof of consistent payment? I also think it's really important to have more research, more funding and more support and more research for fair housing testing, especially into home appraisals and home lending. And I think more robust fair housing testing and enforcement at the city level, at the state level, at the state attorney general's office and the U.S. attorney's office would be very helpful. And then I think another thing to take into consideration is the importance, especially for low and moderate income households, of being able to sustain home ownership. Because for some of the lowest income households who are able to buy a home, that could end up sometimes causing more financial harm than benefit if they experience, like all of us, some type of income shock or like a loss of a job or a medical bill, or need money for home repairs that they don't have access to because they have less wealth. And so to make sure that as we're supporting households in getting access to home ownership, we're also supporting households in sustaining that home ownership. Special purpose credit programs you mentioned, I think, are an important part of this. And then also, as you also alluded to, I think community development financial institutions, especially community development credit unions. I was just speaking with Bill Bynum from the Hope Federal Credit Union in Mississippi, and they've been doing great work building relationships. He described their work as being kind of the private banker to low-income households that wealthy households already have, and being able to extend home ownership through loans that do not have high default rates, but otherwise fall outside of the qualified mortgage guidelines and that banks probably wouldn't make. And I imagine you've already spoken to these folks, but Crystal Cornegay at Mass Housing is obviously very focused on this issue, and Sheila Dillon in the Mayor's Office of Housing as well. So thank you so much for having me.
Thank you, Professor Steele. And just because I know you are still on a time crunch, I'm going to ask you some questions that I have for you. Now, I think, could you speak to the disparate impact that FHA loans have on Black and Latinx borrowers, and how, although all times well-meaning first-time homebuying product can have like a harmful, long-term harmful impact on home buyers who aren't able to access conventional loans?
Yes. So I think that, many first-time home buyers, I was just speaking with Elena McCargo, who's the director of Ginnie Mae, which insures the FHA and VA and USDA rural loans and tribal loans. I think the FHA and VA loan programs are really important programs in terms of creating an entry to home ownership. It is true that they often cost more than conventional loans, and I think that that is an area for advocacy at the federal level to figure out what can be done to bring those closer to parity, because I think it's unfair to have people who have the least resources paying the most for their mortgage. But I think they are really important programs. I think the concern is, to me, is when twofold. One, when especially in non-FHA and non-VA loans, where borrowers of color are being charged more. I've done research on lending during the subprime, the lead up to the mortgage crisis, and I think people are very familiar with the history of redlining and discrimination in access to loans, but that period was really characterized by discrimination through reverse redlining and targeting Black and Latino borrowers for loans at higher costs than comparable white borrowers, often people with strong credit scores. So I think that is a risk that we constantly face. And then I think the other risk is where people are able to access home ownership, but then for reasons outside of their control in terms of home costs or their own incomes or their bills, have an unexpected financial need that they can't meet and then end up in default. And that, if they end up all the way into foreclosure, puts them in a worse situation in a way than if they hadn't actually bought the home to begin with. And so I think it's just important to try and avoid that.
Thank you, Professor. You talked a bit about, which is great, like how do we lean less on credit scores and risk-based pricing? What can we do at the municipal level? Like, one, are you seeing banks, like, is there, I remember Wells Fargo had this commitment in 2017, we're going to create all these new Black homeowners, we're going to do this, and actually the data has shown that they've done actually the opposite in terms of creating new homeowners. But what can we do at the municipal level? What do you see banks doing? And this is a question for all the panelists, to be less reliant on those credit scores, because we know that credit scores themselves are rooted in structural racism, given where people are able to access credit, where the banks are located. There's an ability to rely on alternatives like utilities, telecom, and rental payments. Like, do we see that happening? Is that the way that we should be going? Like, what are the alternatives to this credit and risk-based pricing? And then, like, also a lot of these issues that we're talking about, and I understand that a lot of the things that we're talking about really are about federal advocacy and about federal law. I do think that there are things that we can be doing on the municipal level, so if you could also tie that in, I think that would be helpful. And this is a question that I'm going to ask everyone on the panel, but starting with you. Yes,
I do think that these alternative types of credit scores, there are certainly risks with some of those, and I think we need to be attentive to ways in which some of these alternative characteristics may also have, could potentially have also disparate impacts on the basis of race. So we need to be doing research on that, but I think the idea of using other payments that are not counted towards credit scores now, like rental payments, utilities, telecom payments, I think is crucial, really important to representing, people's ability to pay in a fair way that's not as influenced by, the structural racism that has shaped credit scores. I think on the municipal level, I think a lot of the things that I mentioned can happen on the municipal level, especially a combination of the city and the state in terms of down payment assistance, interest rate assistance, support for sustainable home ownership. But I also think this is not purely within the city's control, but I think we would be benefited if we had a stronger community development credit union that could make loans that might not, that banks, that mainstream banks won't, and support homeowners in whose credit scores and other characteristics would exclude them from mainstream banks.
Great, thank you. I'm going to now pass it on to my council colleague who has a few questions for you. Councilor Kinsey Bach, you now have the floor.
Thank you so much, Madam Chair, and my apologies to the panel for being late. I did have it streaming on my phone as I came over from my prior meeting, so I actually heard all of Justin's testimony, but I do feel bad, especially since this is a panel of many of my favorite people. Professor Steele, I just wanted, one of my questions was the one that Councilor Lujan just asked, so I won't repeat it. I was wondering on the fair housing testing front, I feel like a lot more of the sort of robust testing that I've seen and some of the stuff that Suffolk's done and that we've done in the city has been focused on renters. And I think that's more where my headspace has been on testing. And so I'm sort of curious, do you know of places where people have done robust fair housing testing on the home ownership side? Kind of like where should we look if we want to start thinking about that?
Sure, I think one of the leading, the National Fair Housing Alliance would be a great place to start with. Their general counsel keeps close track of kind of what's happening around the country from their member organizations. The Fair Housing Justice Center in New York City has done extensive testing also on the home ownership side, especially with brokers in terms of racial steering, but they have also done some testing on lending and racial discrimination in lending by loan originators. So I think that they have some expertise in that area. I think testing on appraisals, I have heard that is happening in some places, but I can't recall off the top of my head where.
Okay, and you don't know of any, and I can ask those folks, but you don't know of anything like I felt like Seattle sort of got out ahead of us in terms of fair housing testing on the rental side. You don't know of any municipal place that's proactively doing the home ownership side, do you?
Not off the top of my head, no.
And then what was when you were talking about sort of private banking to the
yes.
lower income folks, I just missed the name of
Bill Bynum. He's the director of the Hope Federal Credit Union in Jackson, Mississippi. But they cover Mississippi, Louisiana, Tennessee, other states as well. And I think that is an important dimension of parity is low-income borrowers need to have a kind of private banker with trustworthy financial advice in their interest, much more so than wealthy households. And so having a credit union that has those established relationships, I think, is really important.
Yeah, and then also has enough money in it to be able to sustain those relationships.
Yes, and so one of the ways that they have done that is by combining a community development credit union with a community CDFI loan fund, so that they're doing business loans and mortgage loans and credit union banking, providing a whole suite of services that can help expand their capacity. But the Biden administration I think, has been very supportive of CDFIs, and so there is some federal support available through the CDFI fund as well.
Great, fantastic. And then I'll just add my +1 on the question that Councilor Lujan asked for all the rest of the panelists. I have long been super frustrated by the credit score thing, again, just because of having come out of the public housing space in terms of the way that it can be applied to voucher holders, because from my perspective, if you're holding a federal voucher, it's like you're walking around with a treasury bill. So the idea that when the full faith and credit of the federal government is backing your rent, that then we're still using this score that is obviously irrelevant and just serves as a screen mostly based on race.
Yes.
and economic status, it's just unbelievably frustrating to me. But I think that seems like a very cut and dry case where it's just obviously irrelevant. But I think that when we push people in other realms, including this one, to sort of move away from risk-based pricing, the question that we get back is the sort of well, I have to be able to make a judicious business decision. It's fine for you to say all of these metrics build in structural racism, but what am I supposed to use? And so I do feel like we all need to work on the answer to that.
Somebody I think would be a great resource on that front is Ed Golding, who's the former director of the Federal Housing Administration and currently a fellow at MIT Sloan. And he has a lot of thoughts about how lenders could move away from risk-based pricing and how that would not be as catastrophic as some make it seem.
Yeah, no, makes sense. And the reality is that, like you just said, people with means do that all the time. Like, I mean, that's bank of mom and dad, that's private banking, like all kinds of things that don't meet like formal muster. People are like, oh yeah, but we have a relationship and it's going to be fine. And that gets encoded unequally into our system. So thank you, Madam Chair.
Thank you, Councillor Bach, and I appreciate you bringing the lens that you always bring to these housing questions. I think it's incredibly important. I want to just say that as I was talking to a lot of you, you all gave me really great names of other people that we could have on this panel, and we've been having 4-hour panels here, 4-hour hearings, and I was trying not to do that, but Professor Golding and the wealth of knowledge that he brings as a former chair, I believe, of the Federal Housing, and Vanessa Perry, who I know you all invited and has like really great ideas. And so I just want to just state that this, for me, I really do see this as being the first hearing that we're having on this. We also invited some of our banks that I think have been leaders in this conversation, especially on the heels of what happened with Silicon Valley Bank. We really wanted to have a bank presence here, best practices. What are you doing? Where are we using these special purpose credits? Like, how are we helping to build Black and brown homeownership and wealth? Two of the banks really wanted to be here and couldn't be here. The Federal Reserve also has a policy where certain blackout dates where they're not able to, and so today is one of them. We hope to have another iteration of this conversation, bringing them, the Mass Bankers Association as well, to hold them accountable for what they are and aren't doing. So this is a first level conversation. I have two questions that are, I think, a bit of ideas, and I think I'll get the idea out first. I was at Harvard Law School yesterday. That's where I went. I was a student attorney at the Harvard Legal Aid Bureau talking to the Housing Law and Policy course. And a student asked me whether home ownership should be the goal if we are persistently and consistently devaluing Black communities at a rate compared to communities, to white communities. And I said, well, at base, that question isn't because these communities are actually less worthy. It's like there aren't that many questions where I'm like just purely racism, but the valuing of communities and saying that a Black neighborhood is going to be, going to have worse schools, is going to have worse roads as a result of just there being the presence of Black homeowners, to me is nothing but an expression of racism in our system, and wanted folks to respond to that sort of idea and that question. And of course, I have forgotten what my original question to you was, but if you have anything else that you wanted to say, I know that you want a time limit, so.
Just briefly, I would say that I think that home ownership in our current society is a really important can be a very important way of building wealth, and that's a part of how we've structured our society, where for most households the largest asset they own is their home. And so I think to have racial disparities in access to home ownership is perpetuating racial inequality. Obviously, as you said, it's true that discrimination in society means that there is less rapid appreciation in home ownership in communities of color, so the benefits to home ownership are less for households of color. And I think for some households, home ownership may not be their preference or their choice, and I think that that's great. And I think we should also be exploring at the same time other forms of ownership that can be more economically democratic as well. We have a great history with community land trusts in the city of Boston and DSNI, so I think that's an important part of this as well.
Thank you, Professor Steele. Yesterday, my office held a lunch and learn with Community Land Trust, bringing the Greater Boston Community Land Trust Network. I think that we need to be looking at the Chinatown Land Trust. Like, we had folks here talking to City Council about the Community Land Trust model, because I do believe in also helping to build up alternatives to what has traditionally blocked and excluded residents. I do think that we need to be thinking about new ways, different ways, and so I appreciate what you've brought to this panel. I'm going to continue on with the rest of my panelists. You are free to go whenever you are able. You can stay as long as you are able. So moving on to Jim Campen.
Okay, thank you. Good morning. Thank you. Thank you for the opportunity to testify today and be part of this panel. My name is Jim Campen. Professor of Economics at Professor Emeritus of Economics at UMass Boston, longtime member of the board of the Mass Affordable Housing Alliance, and a former board president of the Fair Housing Center of Greater Boston. What's most relevant for today is that for 25 years I produced annual reports for the Massachusetts Community and Banking Council on patterns of mortgage lending, beginning with just the city of Boston and eventually expanding to include the entire state and all of its 351 cities and towns. The last of these reports, entitled Changing Patterns 25, analyzed mortgage lending data from 2017 and earlier years. The series of reports was aptly named, and it did indeed document changing patterns in mortgage lending. But for today's hearings, it's much more important to emphasize that these reports documented the persistence of one basic unchanging pattern: substantial racial disparities. Blacks and Latinos consistently received the shares of loans far below their population shares. Types of loans that they did obtain were costlier, and their applications for mortgage loans were persistently denied at higher rates. Given the limitations of publicly available data, however, my reports were unable to investigate the question of whether and to what extent these stark racial and ethnic disparities were partially the result of current racial and ethnic discrimination by mortgage lenders. To be sure, the disparities in mortgage lending patterns reflect the impact that our long history of racial discrimination and exploitation has had on the income and wealth levels, employment histories, and credit scores of Blacks and Latinos. Still, there can be little doubt that racial discrimination by lenders has been and continues to be part of the problem. Indeed, it would be extraordinary if it were not, given the ever-growing body of evidence of racial discrimination in so many other areas. It's difficult to obtain the evidence needed to prove racial discrimination in mortgage lending, but not impossible. So I'll conclude by noting 3 studies that do offer compelling evidence for the existence of such discrimination. 2 of these are by researchers within the Federal Reserve System, one predating my first report and the other from just last December. First, a highly influential Boston Fed study published in 1992, based on access to bank loan application files, so that the research could take into account all of the data that was available to the lenders in making their decisions, found compelling statistical evidence that a Black or Latino borrower with the exact same profile as the average white applicant would be 60% more likely to be denied. This finding was so upsetting to the banks that federal regulators have never allowed it to be repeated in any other year or any other city.
The study.
That study, yes. And in this written document that I gave you, I've got a reference to the study and a link where you can find it online. And also the summary quote on the bottom of the second page. The second study, very recent one, was done just last December by researchers at Minneapolis Fed, based on access to the non-public portion of the expanded Home Mortgage Disclosure Act data that was collected beginning in 2018, which included credit scores. It found that Black applicants were approximately twice as likely to be denied as white applicants with identical loan and borrower characteristics. So those are 2 big statistical studies, but the gold standard way of getting at whether or not there's mortgage lending discrimination is mortgage testing, paired testing. And so I want to call your attention to a study you may know about, but I think it's too little known, done by the Fair Housing Center of Greater Boston in 2006. It was based on paired testing, the gold standard method for documenting discrimination. 20 pairs of testers, with one member of each pair white, the other a person of color, and half of those were African Americans, visited local mortgage lenders posing as potential borrowers. In each case, the person of color was assigned a slightly higher credit score and higher income than the paired white person. Nevertheless, the applicant of color was treated substantially worse than their white counterpart in almost half of the tests, 9 tests out of 20. In the report, you can find for each of those 9 tests a very interesting and powerful summary paragraph what the differences were. So I encourage your committee, the City Council in general, and to advocate for additional paired testing, as it's a very powerful method for exposing. You've already indicated your awareness of that, so I'm just echoing that, which I think other members of the panel probably will as well. So that's my brief statement. I look forward to any questions you might have.
Thank you. Hillary? Thank you. Thank you, Jim. Hillary, you now have the floor. If you'd like to give an opening statement. If not, we can.
Thanks. Hi, thank you, Councilors Louis-Jean and Councilor Bach, for holding the hearing, for being such incredible leaders on this issue as well as others. I have just, from my perspective, you have such an august panel here with all the studies. I'm going to go into a little bit about what MAHA is trying to do and ways that City Council can partner with us and expand some of the programs that are working and some of the things that are reducing costs for borrowers. So first, 2 of MAHA's staff participated in that Greater Boston Fair Housing Center study. You both know Barbara Rice and Cortina Van. When Cortina left, she was told that they would be following right up with her. They were incredibly cordial. She had a higher credit score and better profile than Barbara going in. She couldn't tell when she left that there was anything amiss. But after the fact, Barbara got repeated phone calls, just trying to rope her in, bring her back. You know, are you still interested?
From whom?
From the mortgage company that they both visited. Okay, so Cortina had a better profile. She got no follow-up whatsoever. They were hounding Barbara for weeks. So it's so subtle sometimes, it's not even when someone is in the office. So it's very clear that that needs to continue, that type of testing. Some other things that were instituted after the Federal Reserve Bank study in 1989 that got MAHA into this arena. You know, we were organizing people who were feeling priced out and pushed out of Boston in the 80s. Most of them were black women. And when that study hit the papers, it gave us some leverage to go after this. Some of those policies were, for example, second look policies from a CRA-focused committee within a bank before a denial is issued. So I don't know, are those things still happening? And they really need to continue. Those banks also set up mystery shopper programs because, like in Barbara and Cortina's case, they never even got anywhere near applications. So way before the denial disparities become obvious, there's a whole bunch of applications that never happen. So that's really important as well. The city, I think, has a good lever in, you mentioned it, Councilor Louis-Jean, and the linked deposit. Those reports are being done. There's a 2020 report. I think a lot more could be done in terms of when we worked with Councilor Felix Arroyo on this years ago, he was saying, you know, the city's $1 billion customer, but we're not using that power the way that we should. As far as lowering mortgage costs and eliminating some of the barriers, I think One and One Plus Boston, you know, when we hear about FHA as a great tool across the country, our response is generally, that's true, but in Massachusetts, you're going to pay hundreds and hundreds of dollars more every month for the same house in FHA than you would pay in One and One Plus. Recently,
Would you define that as a potential harm, like of the FHA loan? Like I'm a bit wary to say that, but I think that's harmful for our families that they're paying. You know, yes, it's opening the door that
Right.
otherwise would not be open, but you know.
right, in Massachusetts, you can pay over $1,000 a month more for an FHA loan than for a One or One Plus Boston for the same property. So when lenders route people into FHA, and some of Professor Campen's reports have also in the past looked at what percentage by race are getting government-backed loans versus conventional loans. But I would encourage the council to work with lenders and cooperatively with MAHA and other community organizations to expand the One and One Plus. That is where the costs are much lower. There's no private mortgage insurance. There's no risk-based pricing. And we've just been...
Sorry, we're talking about. Sorry, but continue. We'll just reserve our conversation for questions to you. So,
We've been working with the city and the Mass Housing Partnership to actually double the interest rate discount in One Plus Boston. And this week, we got confirmation from everyone involved, the lenders, MHP, and the city, that that's going to happen. So in addition to no private mortgage insurance, which is hundreds and hundreds of dollars, there's going to be a radically reduced interest rate for these borrowers. So if the rate, it's now going to be 2.3 percentage points below. So if the rate is 7.3, the rate for One Plus Boston will be 5% with no MI, no risk-based pricing. The Mass Housing Partnership did look at credit score data too, and actually recently reduced minimum credit scores for the One and One Plus Boston, and lenders can also use alternative credit. So paying your utilities, paying your rent, no really huge rent to mortgage shock. So that, I think, is one of the most powerful tools we have. And it should be expanded, and I'd love to have counselors work with MAHA and other community organizations to really up the numbers in one outside, not the council, but we want to increase one outside the city, increase One Plus loans within the city. That does rely on some interest rate subsidy, you both know. CPA has been a source of that. ARPA can be a source of that. But we need to make sure that every year the city's part of that partnership is in place so that we leverage the bank commitment to serve borrowers. To date, 68% of borrowers have been people of color in that program, and 40% have been Black borrowers. I think we can do even better there. We now have much bigger down payment assistance. We have Mass Dreams, we have the city's expanded down payment, and Stash specifically for first-gen homebuyers. So 97% of people in Stash are people of color. They're all first-gen, but 97% people of color. And within that, we've got 67% are Black borrowers, 20% Latinx, 7% multiple race, and 2% Asian. So these are really strong programs that specifically redress past harms, but they're not big enough, and we need to make sure that they're growing and that the city's part of it is secure financially so that we leverage the other partners. The last thing I would say is we have, as you know, a ton of people running around with a lot of homebuyer assistance that can't find anything to buy. So that is a really big choke point. So, how is the city using its housing subsidy dollars? MAHA's been a broken record on this. We want the pie to be expanded for all types of affordable housing, but a bigger share for homeownership. We're still doing pretty abysmally badly there. Last year, it was 4% ownership and 96% rental. And most of that is for people making over 50% AMI.
So just I want to be clear, when you talk about city subsidy, what exactly are you talking about?
So if you're using CDBG funds or home funds or CPA funds, so every year the city produces a chart that I ask them for every year, where it shows IDP units, what percentage are rental and what percentage are homeownership, and then government-funded affordable housing, what percentage are rental and what percentage are homeownership, and then within that chart you can see each income group within that. So you can see if the rental housing is for people making 20 or 30 or 40% AMI, or if it's for people making 60 or 70 or 80% AMI. On the general premise that once you're getting into those the higher end of those LMI, whatever, the affordables, the 50% to 80%, people making $55,000, $65,000, $75,000 a year, they can sustain homeownership if they're given an affordable opportunity. But our subsidy dollars are going and our subsidized units are almost entirely rental. And that's not just a city thing. I think if Sheila Dillon, the housing chief, were here, she would remind me that most of the state and the federal money is for rental. And so while it's 4% of the city's units coming online last year were homeownership, it's more than that percentage of the subsidy dollars. So we need to work at both the city level to say for our discretionary sources, CPA, linkage, CDBG, and others, how much can we do on homeownership? And then how can we work with our state delegation to create a low-income housing tax credit at the state level that is for homeownership and not just for rentals? So I think there's some policy levers to increase the supply that doesn't cost $800,000. City land is also another big resource. How is that being used? We're talking about Dorchester Bay City a lot now. It's 2,000 units, 400 affordable rentals. Is there going to be any stabilizing homeownership coming out of that? The BPDA is unclear about how much of that is going to happen, and so that's another area where City Council and BPDA and the mayor have a lot to say about what's developed in Boston and what are the community benefits that come out of it, especially for Black and brown communities. And no matter what the community benefits are, if you're not in the city, it doesn't matter. So we would submit that that is a #1 priority, stabilizing people in homeownership units as part of community benefits so that they're here to enjoy whatever the other community benefits are.
Thank you. Really appreciate your testimony, Hillary. Another judge, I just want to throw out there too that like one of the, and I'm someone who recently became a homeowner as of last year. I'm also a graduate of the MAHA program. Is that one of the things that you notice is the amount, and especially in an expensive city like Boston, and especially if we are providing our families up front with the support that they need, that their mortgage payments can be significantly less than their rental payments. And that is important to stabilizing families, to creating predictability in what your expenses will be. You never know if a landlord is going to increase your rent, but if you have a fixed rate mortgage, you know how much you got to allocate to that. So I just want to thank you for that testimony. Going to move on to Professor, I may be jumping the gun on Professor, but Dr. Cornelison, but I also want to note that I've been joined by my colleagues, City Councilor at Large Mejia and City Councilor for District 4, Brian Worrell. Thank you. If you have openings, I'm happy to give you the floor. We're just going to finish the panel, and then I could come to you for a round of questions if that's okay. Come to you for a round of questions. Okay, great. Dr. Cornelison, and you now have the floor.
Thank you so much. Chairperson Lewis, Jen, members of the committee, thank you very much for inviting me to speak here today. I'm a postdoctoral fellow at the Harvard Joint Center for Housing Studies, and since 2019 I've drawn on interviews, qualitative observations, and data analysis to conduct research on how Black immigrant homebuyers, many of whom were priced out of Boston, are moving to and are transforming the city of Brockton. I identified 4 key trends and challenges for Black homebuyers living in Massachusetts. First, during the pandemic, Black homebuyers across the nation actually saw gains in their ability to buy a home. And we saw a similar marked increase in the number of Black homebuyers here in Massachusetts. Indeed, from 2018 to 2021, the number of Black homebuyers using a mortgage across the state increased by 40%, while the number of white homebuyers remained stable across this period. So in 2018, Black buyers constituted 4.9% of all home buyers in Massachusetts, while by 2021, this share had risen to 6.2%. So even as Black households remain underrepresented among home buyers, the last few years have been a relatively good period for Black home buying in Massachusetts. However, and second, most of these Black home buyers were not buying in the city of Boston. During this period, there was in fact a slight dip in the share of Black homebuyers who were buying within the city. While many Black Bostonians express a desire to stay and to become homeowners in their city, we see that they're increasingly being priced out of Boston and make up an ever smaller share of Boston homebuyers. Third, and by contrast, Most black homebuyers in Massachusetts were only buying in a select few South Shore cities and towns, notably Brockton, but also Randolph, Taunton, and Stoughton. Our data shows that...
What was the city before Stoughton? Dedham?
I cannot really pronounce it.
Taunton.
Taunton,
It's
Taunton,
okay.
yes.
It's okay. We have weird names here.
Yes, I know, it's complicated. Our data shows that racial segregation is actually increasing. Cities like Boston, like Brockton, are becoming increasingly black in the midst of counties like Plymouth County that remains overwhelmingly white. This newly emerging racial segregation around Boston is problematic. As many white homebuyers avoid buying in these segregating cities, future home appreciation may lag behind in these places, which would limit wealth building for black homeowners there. Moreover, segregating cities like Brockton also face an aging infrastructure, the burdens of abandoned industrial and commercial property, problems with urban violence, and school systems stretched by the needs of first-generation immigrant and lower-income students. Segregation concentrates these issues and their costs in black majority communities, which in turn perpetuates racial inequalities in local resources and opportunities. Fourth, and finally, FHA loans continue to play a key role in enabling homeownership for black homebuyers in Massachusetts. Indeed, from 2018 to 2021, 40% of black homebuyers bought a home with an FHA mortgage in Massachusetts, much higher than the 9% of white homebuyers who relied on FHA loan. FHA loans are government-backed loans that target first-time homebuyers. They require a low down payment from only 3.5%, and they do not have risk-based pricing, which often makes them the most affordable option for buyers with a lower credit score. I have two key concerns about how racial discrimination can happen with FHA loans. So first, black home buyers who would qualify for a conventional loan and for whom it may be a better option may end up with an FHA product instead, as they face higher denial rates or may face discrimination by loan officers. They may be pushed towards an FHA product. If this happens, they ultimately end up paying more for a mortgage than they should. And this connects to what you were saying about, one mortgage and one plus mortgage as being a more affordable option than FHA in Massachusetts. Two, my research has also unearthed concerns about how welcomed FHA mortgages are in competitive housing markets around Boston. Especially during the pandemic, FHA buyers struggled to compete with buyers making cash offers or buyers that were waiving contingencies. I have also found that some sellers and their realtors may perceive FHA as a stigmatized product, seeing FHA buyers as somehow less reliable, fearing that the transaction may fall through with FHA, or wanting to avoid the additional bureaucracy of an FHA inspection and appraisal. These are things that cannot be waived for FHA. So the stigma of FHA in competitive markets may introduce additional challenges for black homebuyers who disproportionately rely on FHA loans. So overall, while the pandemic has brought some encouraging gains to have black home buying in Massachusetts, we also have new concerns, notably about the diminishing share of black home buyers in Boston itself, about growing racial segregation in cities and towns around Boston, and about who gets an FHA mortgage and where they are able to buy with FHA. So thank you, and I look forward to any questions.
Thank you very much, Dr. Cornelison. Tom Callahan, you now have the floor.
Thank you, Counselor, and thank you for the invitation to be here this morning and give testimony on these important issues. Thank you and the other counselors for your leadership on these issues of equity and access to housing in Boston. I'm here today my name is Tom Callahan. I'm here today representing the Partnership for Financial Equity, a new name for an organization that's been around since 1990. We are a partnership of financial industry professionals and community leaders dedicated to closing racial wealth gaps and improving the financial futures of low and moderate income households in Massachusetts. We started in 1990 as the Massachusetts Community Banking Council to provide a forum for Massachusetts financial institutions and community organizations to meet and share information with the goal of effecting positive change in the availability of credit and financial services in traditionally underserved communities across the Commonwealth. We have a proud history as a sponsor of Basic Banking for Massachusetts, the first voluntary statewide low-cost checking and savings account program established in 1994. In 1999, we developed the anti-predatory lending campaign, Don't Borrow Trouble, that was adopted by then Mayor Menino and later nationally by Freddie Mac. And for over 25 years, we have produced high-quality research reports. I can say that because Professor Campen was the author of most of those reports on home mortgage lending and small business lending patterns. These reports led to the passage of the Mortgage Lender Community Investment Law, or Mortgage CRA, in 2007, as Massachusetts became the first state in the nation, now followed by Illinois, to cover independent mortgage companies or non-depositories for community reinvestment activities. That leads to our first comment this morning. In the coming month, we will release our first report on mortgage lending with our new partners at the Chicago-based Woodstock Institute. Today, I can give you a brief preview of what that report will show in regard to mortgage lending in the city of Boston. 54% of all home purchase mortgage loans in the city of Boston in 2021 were made by licensed mortgage lenders or out-of-state banks with no branches here in Massachusetts. Less than half, 46%, were made by Massachusetts-based banks and credit unions with Community Reinvestment Act obligations here.
Less than half, so 51% out of state.
54 by what we call LMLs, or licensed mortgage companies, and we've added to that category the out-of-state, the Wells Fargos of the world, right? A bank that has out-of-state, it's a bank, but it does not have branches
branch
here,
here, yeah.
and at least as of this moment, if you don't have a branch here, you don't have a CRA responsibility here. That hopefully is changing, coming with new regs from the Fed, but this is a continuation of a trend we've seen for the last several years. Basically, mortgage lenders are beating banks at the mortgage lending game. Mortgage companies, I should say, independent mortgage companies are beating banks at the mortgage lending game. The performance of those mortgage companies varies widely. Mortgage Network Incorporated, for instance, made 420 purchase and refi loans in Boston in 2021, with just 28, or 7%, going to persons of color, the lowest percentage of any lender in the top 20 lenders in the city. United Shore Financial Services made 47% of its 454 loans to households of color, the highest percentage of any lender in the top 20. So as you can see, licensed mortgage company, the performance varies. However, to some of the earlier testimony from my colleagues here, licensed mortgage lenders are more often using the higher cost FHA loans to serve Boston borrowers, with 4.4% of purchase originations by these lenders being FHA loans, while just 0.6% of bank and state chartered credit unions' home purchase mortgages were FHA, so 6 times more. Banks and credit unions are more likely to be involved in affordable mortgage programs like the One Plus Boston and the One Mortgage program through the Mass Housing Partnership and the city's Office of Housing. And then finally, to the affordability issue that we've all aware of, the average income last year, or in 2021, of borrowers who got a home purchase mortgage in the city of Boston was $254,100, the highest on record.
One more time, can you just repeat that statistic for those at home?
Yep.
And the entire sentence that
The average income of borrowers who got a home purchase mortgage loan in Boston in 2021 was $254,100, the highest on record.
it's 2021.
2021, yeah, not last year, but 2021, which is what this study that's coming out that's the year it will include. Before closing, we would also like to share our thoughts on home appraisal bias. Recent media coverage, lawsuits, studies have all pointed to a significant problem of racial bias in our nation's appraisal system. Professor Steele used all my statistics in the next paragraph, so I'm going to skip it because he cited the exact same Freddie Mac study I was going to study, which I think deserves attention. The Partnership for Financial Equity is currently serving on 2 different national panels addressing this issue. In November, we accepted an invitation to participate in the Council to Advance Residential Equity, CARE, an effort by the Appraisal Foundation to address the issues of appraisal discrimination as well as the lack of diversity in the profession. In December, we were invited to participate in the Appraisal Salon convened by Alignment Advisors, a New York-based consulting firm. This effort was initiated by NAFA, the National Fair Housing Alliance, and includes the Center for Responsible Lending, CoreLogic, National Association of Realtors, Mortgage Bankers Association, the Real Estate Valuation Advocacy Association, Rocket Mortgage, and many others. It's a cross-industry sort of attempt to try to figure out how we can root out bias in the appraisal system. We recently joined with NAFA, the NAACP Legal Defense Fund, Defense and Education Fund, and the National Consumer Law Center, and other civil rights organizations, and signed onto a comment letter asking the Appraisal Foundation to adopt new requirements for comprehensive fair housing training for all appraisers in this country. After passage of this rule, which could come as soon as this month, all appraisers would need to complete, for the first time, would need to complete an in-depth 7-hour course in valuation bias in fair housing laws and regulations, as well as taking a 1-hour exam. Within a certain time period after passage of the rule, all currently licensed and certified all currently licensed and certified appraisers would need to complete an in-depth 7-hour course in valuation bias in fair housing laws and regulations, but with no comprehension exam. We think everybody should have the exam at the end, but that's still to be determined. After the initial 7-hour course, all licensed and certified appraisers would need to complete a 4-hour refresher course each 2-year continuing education period. This is, shouldn't be unprecedented, but that is a brand new requirement that would require a profession that is 97% white to undergo comprehensive fair housing training. This is only one of the issues, though, that needs to be addressed if we want to have confidence in home appraisals for Black and brown borrowers. Empowering consumers with a clear and effective reconsideration of value process when they believe that the value was not fair. Reliance on technology to identify racial bias, picking out words that are used in appraisal reports, for instance. Governance of the appraisal regulatory structure, and recruitment of a more diverse appraisal workforce are all issues that are urgent and need attention from government, lenders, appraisers, and community and civil rights organizations. Locally, Boston would benefit from fair housing testing of appraisals and appraisers, and we would be happy to work with this committee to identify a testing program that could be implemented here. Thank you for the opportunity to testify today, and I look forward to your questions.
Thank you, Tom. I am an unconventional chair in that I have questions as I go. But I'm just still stuck on this number. So the average income of a person buying a home in Boston in 2021 was $254,100. Now, is that one person? Is that two people? Does it depend on sort of what the mortgage application looks like?
Yeah, that's the borrower income.
Yes.
So in some cases, it was one person, some cases it was the household income, the borrower and co-borrower. But yes, so it depends on the borrower.
Okay.
But yes.
Okay. Thank you.
And it was $202,000, the average income of refinance borrowers as well. So we have it broken down by purchase and refi.
In the city of Boston.
In the city, that's specifically just City of Boston statistics. Yeah. Yeah. And
That was
what?
average.
What? Pardon me?
Mean or median?
That is mean.
Mean.
Yeah. Yeah. The one of the things I was talking to Bob Terrell earlier. This report is going to include essentially these types of numbers and statistics for not only the city as a whole, but for each neighborhood in the city. So we'll be able to produce, you'll be able to read those numbers For Hyde Park,
Disaggregate.
for Dorchester, for Roxbury, for each neighborhood of the city, and compare and contrast.
Great, thank you.
What was the purchase price? The average purchase price for the city of Boston?
Yeah, the average value of property, is 914,000.
So we're basically asking you for the report now. Those numbers are alarming. Go ahead. Oh,
I don't want to mess
just,
up
is
your
it really,
flow.
just like a really quick?
Because I'm just modeling behavior from other people, so
no,
I'm just
just-
going to do what I see everybody
Yeah,
else
no,
doing, but I don't want to be disruptive to your flow.
No,
so.
just if you have a really small, like.
Yeah, I'm
clarify.
curious, if the average was 254,000, what was the lowest?
I don't have that number at my fingertips, but I'm sure we can find that for you.
Yeah, I would be curious to know what the lowest is.
Great. All right, thank you. And this, I believe in what I call participatory conversations. So that's how I lead things. If I have a question, I just want to be able to ask it. And that's not always how we do it here on City Council. But and then last but definitely not least, we have Whitney Demetrius. You now have the floor. Thank you.
Thank you so much, Councilor Jen, for the invitation to be part of this panel discussion, and to all the councilors here. My name is Whitney Demetrius. I work at
Just bring the mic a little closer to you. Just so that
Sure,
everyone at
Citizens
home-
Housing and Planning Association, where I'm currently the Director of Fair Housing Engagement, where I previously worked at the Fair Housing Center of Greater Boston as a Deputy Director over our testing program there. So really excited and happy to be part of this conversation here today. Our vision really at CHAPA around fair housing is that everyone deserves to live in a house and a home in which they choose that's free from housing discrimination, right? That is safe, that's healthy, that's accessible, and certainly that is affordable. And so at CHAPA, we believe that we must be really intentional and proactive around how we work to eliminate housing discrimination and promote open communities throughout the state. And so that work really has to be rooted in redressing the history of the policies and the practices that we know to be true, and to really take a multi-pronged approach to really being able to address these issues, right? Really putting people first, being mindful around production, preservation, and planning. So those sort of 4 Ps. While we sit today on the heels of getting ready to approach April, right, the heels of Fair Housing Month, National Fair Housing Month, it will be 55 years since the enactment of the Fair Housing Act, right, in 1968. So the history of zoning and segregation and redlining really impacts the communities that we know and that we see today. So fixing the lending and appraisal system is really critical. However, we understand that the appraisal industry exists within an entire system, right, and that the entire system then needs to be addressed from an equity standpoint. What full choice really means in terms of where people live is that they get to choose where they want to live, really, again, free from housing discrimination. And that means for some, staying in their home. That means for others, being able to move. It also means being able to move back to communities, right? And so we understand that the lack of housing, as my fellow panelists have alluded to, the lack of housing supply really does impact that as well, and that's certainly one of our priorities at CHAPA. And so eliminating discrimination really lays directly into being able to expand housing choice for individuals. I am, like Tom, going to skip some of my statistics in which some of my partners here on the panel have alluded to, but I'll also, just to emphasize that fair housing enforcement and affirmatively furthering fair housing are really key strategies in being able to address these sort of system issues, right? Advocacy at our CHAPA organization, we've been working on an Office of Fair Housing at the state level in partnership with Senator Lydia Edwards and Rep. China, where there would be able to be funding for a fair housing trust, funding that would allow for more enforcement, more testing, education and outreach, research, special projects, these sort of things for community organizations, as well as fair housing initiative programs to be able to proactively do the work that's necessary to redress a lot of these issues. You heard a lot of studies referenced here today, and a lot of which has examined these things over a course of history. We understand that this history of redlining, actually Frederick Babcock, who wrote a lot of the policies around redlining, also wrote the policies around appraisal, right? And so we understand that these things were sort of intentionally baked into these systems, right, around appraisal discrimination and valuing of communities. And so we understand as well that a lot of this is cyclical, right? Where we saw, and we have to sort of understand that these things sort of happen in waves, right? In 1970s, there was a lot more regulation happening. The 1980s, a rise again in housing discrimination, lending discrimination, what have you. In 1990s, more regulation happened, right? 2000, we saw the rise in housing discrimination with the foreclosure prices, these sort of things. 2010, lots of regulation again. And here we are in 2020, really seeing a rise in appraisal discrimination, lending discrimination. And I think to your point, your question earlier, it's going to be important for us to work together to solve these issues, be it stakeholders, be it municipal staff, be it researchers, these sort of things, everyone coming collectively together, but also having a level of community engagement in these processes to be able to hear from the people themselves around what their issues are, right? Around what they've been facing, what their neighbors and friends and family members have faced to really be able to inform the policies that's necessary in redressing. And so we are gearing up for our event in April, which is really around research to redress, right? A lot of the research that we know to be true, the report that Jim Campen alluded to, the gap persists, that the Greater Fair Housing Center of Greater Boston issued, the gap still persists, right? And so that's really, how do we not have to say that again in the next 10 or 20 years? And so I wanted to also allude to your question, Councilor Bach, around what sort of testing and investigation and enforcement could we be doing in the appraisal space. The National Community Reinvestment Coalition just last year, 2020, published an appraisal discrimination study. Right, the first of its kind. It was called Faulty Foundations, right? They found, of course, and what we know to be true in this space, that individual testers who were Black homeowners experienced discrimination at high and alarming rates. What they did with their testing study was put out match pair testing, and they worked with biracial couples, right, where an appraisal would interact with a Black partner, and then another appraisal will interact with a white member of the partner of the couple, right? And so they found, of course, in one instance, that same appraisal, that same home, all the factors being true, right? A bona fide home. That in one instance it was $40,000 difference, right? That the white homeowner was appraised at. And in a separate instance, it was $46,000 more that the white homeowner versus their Black partner had experienced, right? And so on average in their study, it was about $7,000 difference for each test, right, that they encountered. But the discrimination goes beyond just that valuation. It also has a lot in terms of the impact of their treatment, right? Black homeowners who receive reports at delayed 11 weeks, and they're sort of like having to actively go after the appraiser to get their final report, the actual findings, which Tom alluded to, that sometimes can be found in the reports with different information, with different comparative communities, right? And so these larger impacts of what it really means to think about being able to do that and replicate that here in terms of unveiling what's happening in the appraisal market, and really being able to uplift that into real policy and program changes. And so I'll keep my remarks short just to say that I think, again, we have to be really proactive about what we are doing in this space. I'm excited for the report that just came out today. Lots of reports we're referencing, but again, the real point I want to drive home is that these reports really have to lead us to real change, real redress. The Homes for Equity research team through the Opportunities Community Group has been published today, It's titled Racism, Profiteering, Neglect, Persistent Housing Discrimination, and the Destabilization of Roxbury. It looked at policies and practices, both federal, state, and citywide, in terms of actual policies and practices that impacted housing discrimination in communities, but also the neglect, right? The lack of actual practices that would have countered that, right? And so I'm excited about that release and really what that will mean for communities. We'll be highlighting them at our Fair Housing event next month, as well as NCRC's Faulty Foundations report. And so really thinking about what is necessary, but I'm excited about our policy around the Office of Fair Housing statewide and what that would mean for communities throughout the state as well. Thank you for the opportunity and looking forward to questions.
Thank you so much, Whitney. And when we come around for questions, I'll allow you to give us more detail about when and where that event is so that folks at home and present can know and can attend. So I will now, I would like to acknowledge that we've been joined by our City Council President, City Councilor for District 2, President Ed Flynn. Thank you for joining us. I will now turn it over to my colleagues for questions, starting with Councilor Bach.
Great, thank you so much, Councilor Lejeune, and thank you to the panelists for just a wealth of information, even if it's, in many cases, alarming information, and looking forward to both that event that you just spoke about and the release, Tom, of what is now a very anticipated by the council report by your organization. I just wanted to ask if maybe, and it's, I think maybe first and foremost a question for Hillary, but I know others on the panel might be able to help out as well. Just if you can walk the council through kind of what the public support for the One Plus Boston program looks like, because I think that I think that this is key to the question that Councilor Lejeune's been asking about sort of FHA and the fact that, as you said, we have a better product here in Boston, but obviously that product is still throttled volume-wise, right? And so if it's definitely, in my mind, true that if people can access a One Plus Boston mortgage for sure, and even if they can access a one mortgage program outside of Boston, that they're better off with that than with an FHA. But the volume isn't there for everybody to flip tomorrow. And so I think it would be really helpful for the council politically to understand what are the barriers to that and what are the things that grow the volume, and also to recognize that while there is a public subsidy piece, a piece of this is also about asking our banks to step up. And I just think it would be helpful because I think there's more public understanding that the city is supporting down payment assistance, for instance, than necessarily the kind of interest rate buy down stuff, et cetera. So, and then the question of what does it mean for a bank to partner in a program like that and what kind of commitments they're making, I just think it would be good to put on the record here.
Thanks. So the One Plus Boston, as many of you know, it builds on the base of One Mortgage, which really is a public-private partnership. And there are certain commitments that participating lenders have to make. And for all one loans, they sign a contract with MHP. And they do contribute to the affordability. The state then, in exchange for the contributions that the lenders make, the state provides two pieces. One is a loan loss reserve fund. It was part of the original negotiation in 1990. To eliminate private mortgage insurance, even with the 3% down payment. That loan loss reserve is significantly a way lighter lift than private mortgage insurance, so the lenders do accept some level of risk there. The Mass Housing Partnership does issue quarterly reports on performance. This is a very publicly scrutinized program, and over its 30-plus years, it has performed really well. The delinquency and default rates have been better than mortgages overall in Massachusetts, despite having a very high percentage at the very lowest end of the income scale. This has far and away the lowest income borrowers of any mortgage in the state. The other piece that the state provides is a graduated interest payment for borrowers under 80% of AMI. So over the first 7 years of the loan, they get an interest rate subsidy if they need it, in addition to the bank lowering the interest rate somewhat. So some of that benefit, again, comes from the bank lowers the rate, the bank doesn't require private mortgage insurance, there are no loan level price adjusters, and then if that borrower needs additional subsidy, it will go down even further for the first 7 years of the loan. It stays the same for 4 years and then gradually increases years 5 through 7. So that all of these things, I would add, were negotiated with prospective home buyers, women of color primarily, at the table negotiating with the city, the state, and the lenders. And the program has changed over time as the environment has changed. 1+ came into existence because of home prices in Boston. So there's that state layer. On top of that, the city provides additional interest rate subsidy and some enhanced down payment assistance. And this happened prior to Mass Dreams. So now you can add Mass Dreams and the city's financial down payment assistance, and what was up until now has been an additional 1 percentage point reduction. Now for buyers under 80% AMI, it will be an additional 2 percentage points. Why are we making this so complicated? Down payment assistance is so much easier to understand. The reason is that interest rate subsidy, $1 in, produces the same as putting $1.84 in for down payment assistance. So you're almost doubling the impact of every public dollar in when you use it for interest rate subsidy. And of course, that means that the buyer is paying less to the bank and more into the equity in their home. So I too have a little chart. So a buyer that can afford $306,000 with a conventional loan, right? That's already below FHA, but $306,000 with a conventional loan. With one, it's $397,000, so almost $100,000 increase between conventional and one mortgage. 1+, it would be up to $450,000, so $150,000 difference between conventional and 1+. And now with 1++, it's up to $541,000. With the same payment that a conventional loan, you can buy a $300,000 house. With 1+, you can buy a $541,000 home. So that's why it's structured in this complicated way. It's way above my pay grade to figure that out, but we were the community force saying we need housing, we need stability, and fortunately we had amazing partners at the city and at MHP who have the technical expertise to figure that out, that's how we get the biggest bang for the buck. We do, and I would say the throttle hold right now is supply. Yeah. It's not lender appetite, and even it's not city resources. So if we have to do something about supply. So we have 12 banks now in 1+ in Boston. That's amazing. But we need council help to help monitor, and how many loans can you commit to, and how many did you actually do? Oh, you didn't quite meet the goal. What are other things you're going to do as a lender to make sure that you hit the mark? But lenders are coming back saying we have a lot of pre-approvals in the pipeline and people are running around trying to find a home. So again, that's why I kind of harped on the city resources and development in the city as other really important levers to marry with, not to do instead. Right. So maximize 1+. That doubles your impact, right? Every dollar into subsidy of a home price or every dollar into down payment assistance, you get $2 in 1+. But then you need other factors.
And that was where I was going to go next, which is just that I think fundamentally what those what those numbers show that Tom shared, the 254,000 average, the average home price of 914, I will say that those are actually probably less shocking to me because I represent the area of the city with the wealthiest folks. And I think the reality is that in a very limited supply, those folks are going to keep out competing. And even when we are super increasing those, like you said, people's buying power, it's just so far below the average stock available. I think that is why it's important that the city put money into affordable housing homeownership stock creation with ARPA. But the question of like, how do we actually grow that supply so that there's something for people to buy, and in my mind grow that like specifically affordable home ownership like supply, because I just think our ability to create enough home ownership supply quickly enough to dilute down the averages in a way that are actually accessible to our 1+ Boston eligible folks is just really tough. So it does feel like we have to have both things together, but I thank you for that walkthrough, Hillary. I wanted us to talk about it because to me, I often like tell the story of the advocacy for this just because it's like one of the like quickest stories I know in my life of Boston politics, of sort of seeing folks get together in church basements and Maha's organizing room and say, hey, we need more money for affordable home ownership specifically in our communities, largely coming out of the Black communities of Boston, making that a keystone of the CPA advocacy, and then having an initial $5 million to seed the 1+ Boston program be in the very first round of CPA funding. Like, to me, when I talk to people about like, what does it mean to get involved and to kind of change the landscape, I think that the progress on 1+ Boston has been exemplary, but now we're in this crazy interest rate environment and supply constrictions such that like, we would be so much more further behind if you all hadn't worked as part of a coalition on that, and yet we also need to do so much more. Madam Chair, I can save my other questions for the next round.
Thank you, Councilor Bach. Next, Councilor Julie Mejia, you now have the floor.
Thank you, Chair, and thank you all for being here. So first let me just start off by saying I'm also a Maha graduate and purchased a home in 2017 out of necessity. The triple decker that my mom had lived in, she was under Section 8, and the person who purchased the home increased the rent to the point that my mom and her low wage work wasn't going to be able to keep up with the rent. So I said to my mom, I'm going to buy a house. And at the time, I didn't even know what my credit score was. And I had to take out my entire 401k to be able to do that. And I ended up on the FHA situation. So I'm curious, I think that the people that follow the work that we're trying to do here on this council would benefit from really understanding kind of like in just the most simplest terms, kind of the dangers around that, right? So, because I also think that there's also this, I think it's private in
Mortgage insurance, PMI.
PMI, right? Because I don't think, see, there's this something that's happening in the high level that when you get down to it, the people just get so confused. I was just so happy that I got approved. I didn't care. I didn't look at the red tape. I didn't look at any, I'm like, oh my God, they're giving me a loan, yes. Because I needed to get my mom out of that space. And I had to do whatever, And so I think that there's a lot more that's happening behind the scenes that we're not really like leaning into right now, that I'd love for you all to kind of help us understand so that people can really lean into this conversation in a way that they can see the advocacy and what we're trying to do here. Because I feel like now that I'm in this hearing, I feel like I got gypped.
So one thing that we're working on now that we've done in the past is a simple one-page chart. It says, same house, this is what you pay FHA, this is what you pay mass housing, this is what you pay one, this is what you pay 1+, so that you don't have to understand all the jargon from the mortgage industry. You can just say, same house, these are the different products and what I'd pay. On the flip side, these are the products, this is my same income, this is what I can afford to buy. And MAHA educates almost 3,000 homebuyers a year. And we distribute those charts there, but also to the other first-time homebuyer organizations, so that people will have a really simple way to evaluate. And then you have to go to the right lender. That's where you get off track, is if someone, after you leave the homebuyer class, says, oh, my friend Fred,
Yeah.
he's great. Everyone gets approved with Fred. And you go to Fred, and Fred puts you in FHA.
Right, so let's follow that thread just really quick, because what happens is that people, particularly people of, low-income people who have less resources, less access to information, out of desperation sometimes just go, well, I'm going to go with Fred, because Fred is going to approve me, and at the end of the day, the bottom line is I just want to get that house.
Yeah.
Right, and so can you just, what avenues are in place to help protect people who are navigating this? I mean, aside from the home buyers, because not everybody's going to go through that process, just like, what are the parameters? And I see you're making, just would love to hear a little, I feel like there's a little thought bubble there, but I'd love to bring you into the conversation.
Councilor Mejia, can I also interject? Because I think maybe what you were asking is if one of the advocates could define what PMI is so that folks can know what the PMI is, and also, again, the difference between a conventional loan and FHA loan. So like the bare bones basic, if that's not what you want, then you don't have to.
I mean, you could do that, but I kind of really want us to help people understand kind of like how we end up going down the rabbit hole out of desperation. And kind of like the opportunity that we have to hold some of these folks more accountable to how they're showing up is what I'm really trying to get at.
If I may.
Yes, please. I could see that energy, so I need that in his
Okay,
space.
well, here, let me do my best to provide that, yes. And I think to your question about it in its simplest form, right, to know that you have protections, right? And I think I, too, am a graduate of the MAHA program, right? Like it seems like many of us in this room, right? And it was crucial for me in going through that process to understand the various nuances, but also knowing that they were a resource to come back to once I was primed and ready to purchase the home, to be able to get more information, right? And also to know that if I was violated or felt like I had been discriminated or had gotten something that was, sort of unequal treatment, I knew where to go, right? So knowing that I could file a complaint at MCAD, or I could go to the Fair Housing Commission at the City of Boston and be able to come to them and come to advocates to really be able to stand in my place to talk about, talk through what those things are, to be able to get resources. And so that's why I know that it's so crucial for education and outreach, not just through the first-time homebuyers program, but through other avenues. And so partnering with religious institutions and community groups and those trusted spaces are important. However, I know, to your point, sometimes you're in situations where, you're desperate and you are just, not caring about the logistics, but trying to just solidify housing. And we understand why, because housing, again, is so crucial to your livelihood, right? Your access to your schools and your transportation and your health care and all of those systems, but also knowing that there are places where you can go to be able to support you, right? We talk about appraisal discrimination, right? You get trying to get a refinance so that you can send your kids to school, right? And just like, I just want to send my kids to school. Like, this might seem like a low number, but I'm not sure what I do outside of that. I don't have a white neighbor or friend or family member to stand in my place and do my own mystery shopping. But knowing that a Fair Housing Commission, right, at the City of Boston will be able to do testing, right, for instance, around appraisal discrimination, and I don't have to pay the extra $500 to try to get a separate appraisal because I think I maybe sort of kind of was discriminated against, right? So being able to know that there are agencies like and partners like that sit at this table and others and know where to go, I think is what's important. But also, in order for those agencies to do that work well, they have to be resourced, right? You have to put funding behind those things. With Bob Terrell and others, Dwayne Tyndall, my mentors in this space have always told me, budgets are moral documents. So like, how do we make sure that these agencies are then positioned in such a way to be able to help folks? but also so that before they get into these troubling situations, they know where they could potentially go. And elevating those stories is important as well, right? And so there's a role for media, social media, to really elevate that as well.
Yeah, thank you for that. Do I have time for one more question,
Sure.
Chair? You sure? Thank you.
Can I just jump in, or go ahead?
No, I just get really paranoid about my time, so, but you go ahead.
Well, you had talked about the rabbit hole.
Yeah.
And I wanted to speak specifically to that. Guaranteed rate mortgage had 3,000 Boston residents apply for a mortgage last year. Rocket Mortgage had 1,300. Fairway Independent Mortgage Company had 1,000. And Loan Depot had almost 1,900. None of those institutions, if you opened the door into those institutions and got down that path, none of them offer you the 1 or 1+.
That's right.
They don't offer that product. So we've got, Boston has 54% of its mortgage loans being done by these mortgage companies and out-of-state banks. That's actually, when you see the whole report, that's actually good news. Many other geographies, gateway cities and others, you're going to see those numbers being 2/3 mortgage companies and 1/3 bank. This is a trend that is going to be hard to reverse. But I think we should think about, obviously, banks who can fill that void, but also how can we engage the mortgage companies to partner with banks in different ways that they haven't thought about yet. Because they're beating the banks, in some cases, at their own game. Historically, you thought of a bank to go to a mortgage company, right? Rocket has Super Bowl ads, press button, get mortgage. That's the new way all of us think about getting mortgages. I have two 20-something daughters. They don't necessarily first think of a bank. They think, I'm going to go to a mortgage company because that's who they see really advertising. So I think a partnership, I think we have the tools here in Massachusetts, here in Boston, to create a local secondary market where these mortgage companies originate, sell to a lender, a bank lender, or sell to an intermediary, or some combination of money coming from intermediaries and banks, because we're fighting over a smaller share of the pie.
Yep.
When we talk about just banks. And I think we have to talk about mortgage companies and what they can do with these products. So I'm sorry.
No, I know. Don't be sorry, please. I appreciate that because we have a lot of people who are tuning in that could benefit from, what you're sharing right now because it helps provide some context in terms of the why we're here. So I appreciate that. The only thing that I just wanted to uplift, right, is that I think to this point is that when you're local and you have people here, it makes it a little bit more personal so that you have somebody who you can really hold accountable or at least develop a more meaningful relationship with. It doesn't feel like some out of state, out of country, sometimes even out of the country type of situation. But I just wanted to end with this is that, a lot of the parents that I used to work with have wanted to purchase a home but had to move to Brockton. And you are absolutely right. The migration plan to displace Black and brown people based on where you believe they should be living has created a pathway outside of Boston. And most of the parents now that were part of an organization that I created here in Boston are now in Brockton. And now they're replicating the work that they did in Boston in Brockton. And so it's just pushing people out and it's being really thoughtful and strategic in that way. And I'm just curious that at some point, as we continue to have these conversations, that there has to be a role for the city to play and even holding ourselves accountable to that displacement. And I'm not asking you to agree or confirm that with me, but I just feel like there is a role for the city to play, and I think you've named some very specific ways that we can be helpful, and I look forward to doing just that. That's it. Thank you.
Oh, did someone want to jump in? Okay. Thank you, Councilor Mejia. Now on to City Councilor Brian Rowe, District 4. You have the floor. Councilor Bott to the rescue.
Thank you, Councilor Bach and Chair Louis Jen, and thank you to the panelists. And I worked in real estate for 20 years, and I remember just kind of wondering why, right? When I went to a open house or put in an offer, why the FHA loan was, even though it was above asking price, we were being accommodated to the seller on all their asks. You know, why was there so much stigma around the FHA loans? And it bothered me for so long, and I'm glad that at the time I wasn't really aware of like the 1+ mortgage. So it sounds like that is the solution to kind of root out the bias between FHA is putting people into 1+ mortgage. But that used to bother me, and I'm glad that we have a solution to that. But it sounds like we're still trying to figure out like the solution to like the average income part of it, because even though that the one mortgage will get you out of that bias in the competitive market, it sounds like the $500,000 is still below the average price of $914,000, right, of a sale of a home. So what other solutions can we provide to help increase the buying power of our home buyers to make it actual reality for them to buy here in Boston? And then the other part that I hear from home buyers is sometimes it's the inventory, not the lack of inventory, but the actual inventory that's here in Boston, right? That it's, no one wants to live in a condo when they could get a single family house with a backyard. Are we hearing that, and I guess this is for you, Hillary, like, are you hearing that from some of the buyers as well? It's like the type of inventory, not the lack of, but the type of inventory that we're having here in Boston, that it's not just kind of meeting the needs of what people want.
So I'd say we have a mix. With 3,000 buyers, you're going to have a mix. And it's a balancing act for the city, particularly in terms of new development. How many homeowners can you create in a somewhat limited amount of land, right, within Boston? So, yeah, some people are going to Attleboro now. You know, Brockton's even become out of reach for a lot of our buyers. Mm-hmm. So Taunton and Attleboro are really big destinations. As far as the increased affordability, I think, you know, we've worked together and talked about the Section 8 to homeownership, really increasing that. That's a federal resource that's coming in for homeownership that's not really being fully utilized. There's a smaller city-funded program, as you're well aware. But Section 8 to homeownership really takes a lot of that federal rental subsidy and says, who's getting the equity? Who's getting the appreciation on these properties? It should be the people who are getting the federal assistance. And as far as affordability for people who don't have Section 8 or some other way to subsidize the payment going all the way around, I think not only the city's development and city-funded development, but what are our developers developing in this city is another huge avenue. I'm sorry, Councilor Mejia just had to leave because Dorchester Bay City is a really big deal in Dorchester, and I look forward to speaking with you later today about it. But it's one example of many. You know, Harvard is going to develop a third of Alston. And their partners, and there's things going up all over the city. How are we using our land? The city is doing the zoning, right, for the development. The developers can't do what they want to do unless the city partners with them to change the zoning to specifically allow it. So the city has a huge role in what might otherwise be a purely private sector resource. And Councillor Bach, I know you mentioned too, right, all these things are flipping to labs, but if I'll say Dorchester-based city again, just because we're in Dorchester and I know that one, but there's other things. 15,000 new jobs, but how many new homeownership units? Right now, 0. That project could throw off a ton of affordable home ownership opportunities, but only if somebody advocates for it in addition to MAHA. So I want to thank you all. And Councillor Louis-Jean, you were there way before you were even a councillor on this project, but I just used that one. I know it the best, but it's all over the city that the city is rezoning for development, and what are we zoning for? Not homeownership housing in most cases.
Yeah, and I do agree with that. And every time the developer comes into the district, I think that as a district council, we do have that advocacy power to push the developer to home ownership models. But we often get the pushback that it's not feasible. But we have to continue to advocate for a model that is feasible. And I guess my last question is, I do like the idea of this collaboration between mortgage company and the bank collaboration, but are no mortgage companies part of the One Plus Mortgage? Is that the case right now?
That's the case. Yeah.
Oh, wow. And they do majority of our loans.
Yeah, and it's to the reason Hillary said that mortgage companies typically that are non-depositories are not structured to hold mortgages, and these loans, because they're slightly below market rate, there's a 30 basis point discount, are not easily sold on the secondary market because that discount has to be absorbed at time of sale, and that's a financial transaction most companies are unwilling to make. So that's the idea behind a local secondary market, would be to figure out as the loan gets transferred from, say, a mortgage company to an investor, whether that investor be a bank or another fund, figuring out how that discount is shared, I think would be a key part of solving that problem. There's nothing structurally or legally prohibiting mortgage companies from participating. MHP would welcome mortgage company participation, I think, in the program, but it's just usually that rate discount is the barrier. But I think it's a barrier that can be solved.
Awesome. Well, thank you. I would love to work on that with you and any other counselor, because I think that's a great idea. Thank you.
Thank you, Councilor Orrell. We'll now move to City Council President Ed Flynn for any remarks or questions.
Thank you, Madam Chair, and thank you to the panel for the important work that you're doing on this critical issue that's impacting so many in the city. Just thinking about what other cities, I know Boston is doing great work on this issue, but are there other cities across the country that have any other programs similar to Boston, or even more expansive or more in greater detail than Boston, more effective than Boston, that we can use some of those examples or some of those programs to help us in this crisis?
It's a good question. And there's been a lot of, so I don't know, I don't have a specific answer for you. I know some of the West Coast cities, certainly Seattle, Portland, Minneapolis, also in the Midwest, they have some innovative homeownership programs. Mm-hmm. I know Sheila Dillon is really on top of that. They really try to look at who else is doing innovative homeownership. I have to say, I have to give credit to Sheila. I think over the course of my career, Massachusetts used to be regarded as a housing leader, as a state. We're not so much anymore, but at the city level, I think with people like Sheila and Karen and the team at the Office of Housing, I think we, on this issue specifically, which is more my expertise, we've maintained that leadership role in the country. That's not to say there's not, innovative programs. And I know there's a reparations commission. There's been a lot of work on reparations related to homeownership. Evanston, Illinois, for instance. So there's some interesting models out there that I think definitely are worth looking at.
Now, what is the average salary for a person, an African-American couple or a single person that is buying a home in Boston? Did you have a figure on that?
I might. Yeah. So.
And can you repeat? Can you repeat that in because he may have missed the overarching stat that you gave, and then his stat as well.
Yeah, the overarching stat is the average income of a successful home buyer in the city of Boston who got a mortgage in 2021 was $254,000. That's all buyers, all races. So what I have by race is broken out a little bit. So if you went to a bank in a credit union and you got a mortgage and you were black, the average income of those borrowers was $127,000. Latino 179, white 283, and Asian 225. So that's just one snippet of it, but those are the average income. And I think, I don't have the numbers, but you would, I think it'd be a reasonable assumption to make that the 1 and 1 Plus program have had an impact on that black number being as low. I hate to use that word because 127 is a pretty good income, 127,000. But I think that's where you're seeing the impact of those affordable mortgage programs the city is investing in, because otherwise that number would probably be much higher, because to buy a market rate house without those affordable mortgage programs is just you're gonna require more income.
So the average for an African-American couple or individual is around 127 salary for a person buying a home, or a couple, it's roughly around 254. So a significant difference in terms of salary. So what incentives are there for the banking community to assist the African-American potential home buyer with the salary of a combined salary of 127? Are we doing anything specifically in terms of any type of city assistance or state assistance to work closely with that bank on any type of support we provide, the Banking Institute?
So part of the incentive is kind of a carrot stick. It's the Community Reinvestment Act. And so banks and credit unions that have branches in the state have to serve the credit needs of everyone in their communities. And so there are city and state assistance for those buyers, and it's a partnership with the lender. It says, lender, if you do A, B, and C, government will do D, E, and F, and all those things together will get this home buyer into a house. So they get help meeting their legal requirement to serve their communities. In exchange, the city gets some concessions from the banks to make it more affordable. And then the other incentive is just reports that we've been talking about here and activism on the part of hearings like this where counselors are concerned about their constituents.
I would just insert, too, this is an opportunity, Hillary mentioned the Community Reinvestment Act. So we may be weeks, days, weeks, or months away, but for the first reform from the federal government, federal regulators of the Community Reinvestment Act in 25 years. And that reform is going to have a number of potential changes to the CRA, but I think one of the most significant is a change in how a bank's, what they call assessment area, is defined. And back in the day, 1977, when the Community Reinvestment Act was written, banks, the CRA was tied to where banks had physical bricks and mortar branches. So if you had branches in a neighborhood, you had a CRA responsibility in that neighborhood, or a city, or a county. We know that's not how modern finance works anymore and modern banking. And so for the first time, assessment areas are going to be measured, we think, where no one has seen the final regs, but based on the preliminary regs, we think the federal regulator is going to have a bricks and mortar trigger for branches, for assessment areas, but also a lending trigger. So Wells Fargo is a good example. Wells Fargo is one of the top 10 lenders in the city of Boston, but has no CRA responsibilities in the city of Boston because, as you know, Counselor, has no branches here, deposit-taking branches. So, but because of their lending, under the new CRA reform regs, we anticipate that a Wells Fargo and many others might have new CRA requirements for the city of Boston, and that's potentially new partner for the city, for community organizations to engage with. So that, stay tuned. We've heard rumors, everything from next week to August, about when these, the more recent rumors are August, but we'll have to see when that comes out. But that's going to be a significant change to how Community Reinvestment Act is regulated.
Thank you. And my final question, do I have time for one more question, Madam Chair?
You're the president.
And I should have apologized at the beginning. I was late. I had a medical appointment, so I apologize to the panel for being late this morning. So my comment and question is, Black-owned banks in Boston, what role, if any, are they playing? And I ask that question because when you see someone get a mortgage from a bank, doesn't it seem almost immediately that bank is kind of selling that mortgage to another banking institution? So I ask that question, what are Black-owned banks doing on this crisis, and don't they have a special obligation to keep that mortgage at the bank and not sell or transfer it or sell off that mortgage to another bank? Because from my experience owning a home, it just seems like that mortgage that your bank is always trying to sell the mortgage to a different group. Is that accurate, or is that just kind of is that a concern that you have?
So just on, there's only one Black-owned bank in the state that I'm aware of, One United. They are not a significant mortgage lender at all. They're more into credit card they're pretty much a big credit card bank, but they're not a mortgage lending vehicle for the most part. And they may do a handful of mortgages, but they have not been a significant mortgage player in the city, you know.
How come there are no black-owned banks in the city?
There's no black-owned banks. That's the only black-owned bank I'm aware of in the state. There's very few black-owned banks in the country. They're just, it's a, you know, it's a long story, but it's discrimination and institutional racism and access to capital, and I don't know the exact number of black-owned banks, maybe somebody on the panel does, in the country, but there's very, very few.
Well, maybe if I don't use the term black-owned banks, but say a long-time neighborhood bank in a neighborhood that has a commitment to the community, that has a commitment to the Roxbury community, the Dorchester community, to the Mattapan community. I don't know if there are those such banks around anymore, but I guess my question is, they at least have some type of commitment to the residents in that neighborhood, you would think. Is that the case?
Yeah, I mean, the Community Reinvestment Act governs any bank, whether they're Bank of America or, I guess to talk to in extremes, Bank of America being the biggest bank in the state, to the Cooperative Bank is a good example. Cooperative Bank is in Rosendale, in Hyde Park, and
I think they bought, didn't they buy the?
I'm sure. Anyways, but they're in a couple of neighborhoods in the city, and they're a tiny institution. But the Cooperative Bank is, I believe, Hillary will correct me, is part of One Plus Boston. So, yeah, I think banks big and small have CRA obligations, and that's to the city as a whole, to the neighborhoods they operate in. When Community Reinvestment Act works well, that means they're investing in their neighborhood and they're hopefully earning an outstanding rating. It's one of the reasons I think you saw the concern with Silicon Valley Bank failure. Silicon Valley Bank, as you know, bought Boston Private Bank a couple of years ago. Boston Private Bank, for the most part, with one exception, over the last 20 years, had earned outstanding, since 1995, I believe, had earned significant number of outstanding ratings. How did they earn that? In part because they were an active mortgage lender in the One program, and also did other types of community development lending as well. But those are the pieces to earn, hopefully, we would like all banks to aspire to earn an outstanding community reinvestment rating, because that means they're investing in their neighborhood, as you said.
Thank you. One final comment, I guess, not really a question, but a comment. From my experience, I have seen various credit unions in Boston have a positive impact in particular neighborhoods and engagement in neighborhoods. Does that mean that they are committed to providing mortgages to qualified potential black homeowners?
Some community banks offer the best products and are very engaged in lending. Some of them are not. So I don't always see a correlation between the scale of the bank and the investment in the community. We've also lost a number of those community banks. I'm sure you're familiar with Mount Washington.
Yeah.
Went up the chain.
Yeah.
That's happened in a number of cases. Hyde Park Savings Bank, the same way. In Maha's experience, the local and the state banks are significantly easier to deal with, I think, to your point, as opposed to the city banks, the Bank of America's, because they cannot find Boston on a map. when we started this, and Mr. Terrell will remember, all the bank presidents were in downtown Boston. You could find them. They cared what people in their communities thought. The Royal Bank of Scotland is a really hard place for us to reach out to.
Right.
I do think Tom's idea about secondary markets is a really important one, and perhaps some of these larger lenders can be convinced, but it's going to take a lot of advocacy to make that happen. Credit unions, we have one credit union that shall remain nameless that markets itself incredibly as an affordable place to go and will treat you much better than anyone else. And they have refused to do the most affordable products. We have other credit unions that are participating and doing really well. So I don't see a correlation there either.
Well, I would say City of Boston Credit Union is the one credit union in the 1+ mortgage program, and they've done, as of last fall, they had done 15 mortgages in the 1+ program. But I think Hillary, I agree with what Hillary just said, is whether you're talking about a bank or credit union, it's not the charter, it's the commitment throughout the institution, and its commitment starts with the CEO and filters on through the organization. But it's so there's yeah, I'll just leave it there.
Thank you, Tom.
Thank you to the panel, and my last point is what was always important to me for potential black owners of homes is especially city workers. You're working so hard for the residents of Boston. You might make $50,000 a year. You might make $60,000 or $70,000 a year working for the Public Works or for the Transportation Department. But that's a salary that almost precludes you from buying a home. But you're working 50 hours a week. You're involved in the community. You're involved in Little League. You're involved in coaching. You're involved in mentoring. You're providing a great service to the residents of the city. There has to be a place in Boston for that worker, and there has to be a place for that worker to be able to access a loan so that person can buy a small house in Boston. I don't think we're all looking for large houses, but just so the person can make the American dream of owning a home. No one wants to get rich, but if they want to support their family. But are we targeting anything? And I know we are, but are we looking at that city worker and saying, we're really feeling that worker because they work so hard for the residents, but by the way, you have to move outside of the city because there's no room for you in the inn.
Thank you, President Gunn. And I think that's a well-taken question. And I think the comments that Hillary has been making regarding the 1+ Boston mortgage program, the 1++, that we continue to lean in and support that because that increases the purchasing power of that person who's making $50,000, $60,000 and working and struggling for the city. But we, as a city council, have a responsibility to support the construction and the building of more affordable home ownership opportunities so that people at those income levels are able to buy. And you asked a question that I think, and I'm just trying to move us along because the administration has been here from the very beginning, and I want to thank you, Bob and Karen, for being here and listening. Sometimes administration goes first, sometimes the panelists go first, but I think this has been incredible, hopefully for you to hear about the work that advocates have been doing and the research that they've been elevating. President Flynn, you asked about black-owned banks. Back in between 1888 and 1934, there were 134 black-owned banks across the country, and that number has dwindled to somewhere in the 20s, between 20 and 23, according to the Federal Deposit Insurance Corporation. So there are a few. I bank with One United Bank. That's where my business as a lawyer, where it was. and they do offer residential mortgage, but it's just, that's not their main breadwinner. And so we could talk about what we can do here on the city council in the city to encourage and foster more black banks being located here in Boston. How do we, banks have been buying up banks. There's a concentration of wealth and a few banks. We could talk about public banks. We can talk about how do we fight against these monopolies that are happening in industry. And I think those are good conversations for us to figure out where we can find our voice in those discussions on a municipal level. I asked a lot of questions as we went, just a few targeted questions to to both Jim and to Whitney. If you say the gold standard is pair testing, are there cities that are doing what we want to do here in Boston? Do you know of anywhere that has a model that we should be looking at?
I'm not up to date on that, no.
Okay.
Just going back to the question around appraisal discrimination testing, as mentioned, the National Community Reinvestment Coalition has done an appraisal study called the Faulty Foundations, and they did it in the city of Baltimore. So working with their partner there through their fair housing organization there. And so I think it's a good example to be able to look at sort of the methodology that was used within that testing, and certainly how they are sort of broadening that out into other communities as well, which of course sort of are underway and have some disclosures around. But I think that model in Baltimore was a good example that national organization is doing, that we should be looking to, and to earlier comments around the National Fair Housing Alliance that does testing and training for organizations who are looking to do certain types of testing to sort of build out the infrastructure to be able to do more lending testing, more insurance testing, appraisal testing. They're certainly a resource as well.
Thank you. And then last question is for Tom. Again, I think you alarmed all of us with those numbers, so please make sure that you send the report directly to the city council. My sister who's at home, who actually works for the Federal Reserve, is herself trying to become a homeowner, and was like, are those numbers, we need the median numbers. So I hope that in the report, we'll also have the median numbers, because as Councilor Block stated, those numbers can skew widely, like people at the tail end, Beacon Hill and wealthier parts can really skew those numbers, and doesn't give you an accurate picture of like who all is here and in this game. The median, I think, will help us with those numbers. So that's a question that I'm asking on her behalf. So. Awesome.
Yes, no, we are working with our research partner on that as we speak.
Awesome. Well, and then I have one last question regarding if we know whether Black Bostonians, why aren't they accessing the home loan market in the same proportion as in other cities like Brockton? Like, is there something else that's happening between the two cities that's making Brockton a space other than like cost, a much more like an easier place for Black Bostonians, or is it just?
Yeah, I think it goes partly to the question of the councilman before. It's about inventory too, and the types of houses that people, want to access. Like if you want a big house, like a 2-3 bedroom with a backyard, there's a lot of like ranch homes that are very affordable in Brockton. They were like built in the 60s and the 70s there. But I also just want to bring in this discussion, 46% of all Black households in Massachusetts are headed by someone who immigrated to this country, right? So sort of the dimension of immigration and Brockton emerging not just as a Black majority city, but also like the Cape Verdean diaspora. Like, it has the largest Cape Verdean diaspora in the world living in Brockton. So there's also something unique about the attraction of living with, having 5 Cape Verdean restaurants or having a suburban-sized tropical supermarkets to like go to. So it has these unique amenities too that I think are drawing people in as well.
So it's amenities and not anything that Brockton is doing specifically to support lending institutions or for housing. It's just sort of like the landscape of what the city looks like. We can attribute a lot of.
Yeah, I think what the city has to offer. It's not just a push factor, I would say. There's also a particular kind of pull of the city of Brockton itself for Black home buyers. Yeah.
If I could add to that, I think it's added to that conversation too about how, business opportunities for people of color in Brockton, those sort of things. But I think the other question we have to be asking ourselves about why people are moving to certain parts of the state is also this idea about welcoming communities, right? And what does it mean to foster
Great
an
point.
open and welcoming community? So open not just about the housing supply and availability that is there, the different type, the tenure, et cetera, to your point about choice, right? But also about what does it mean to move into a community, to your point about affinity, right? But also about how am I treated when I live there? How do my kids, what are their experiences when they go to school, go to the park, right? What does it mean when I jog down the street? And so also there's this sense around community, right? Is there a Juneteenth event, right? So there are these sort of things that people think about, and to the point earlier about the councilwoman around sort of this trust building, right? You hear that this is a place where you go, and so you hear this idea that this is a welcoming community for us, right? And so there's this buy-in to that. But how are other communities, and what are their responsibility around making sure that you're fostering a welcoming community in the 100 ways that that's defined?
Thank you, Whitney. I think that's an excellent point, and I think that in our work to try to build a more inclusive Boston, a welcoming Boston, that's important. I just think about it's a fine line between feeling welcoming and steering people to Brockton instead of Braintree, right? And I think those are the things that, Brockton has like this other city has the businesses, it has the culture, but how much of that too, the fair housing implications too. But I think that's a well-taken point.
Even within suburbs, right? Braintree and Randolph, I believe, share a border, but they're really close to each other. Their housing stock's not that much different. But the racial demographics of who buys in Randolph versus who buys in Braintree are dramatically different. And it goes to what Whitney was saying.
Thank you. This has been really a terrific conversation, and I think it's going to help inform the work we do. We're entering budget season and thinking about how we uplift and support some of the work that our next panel, which is administration, is doing, is incredibly important. So thank you. You are free to stay. I hope that you do. I hope that you continue to partner with us and feed us ideas and policy papers and challenge us to be accountable to our residents who are facing discrimination in the lending and appraisal markets, who are getting pushed out of our city. We have an obligation to create space for them, to allow them to return, to be creating opportunities for them to be able to buy homes here in the city, and to be doing the work of affirmatively furthering fair housing. So I thank all of you for your presence here, and please do stick around. We probably have about 40 minutes for the administration, but I do definitely want to hear their voice. So thank you. We'll now call up Bob Terrell, Executive Director for the Office of Fair Housing and Equity for the City of Boston, and Karen Rebaza, Deputy Director for the Boston Home Center. I am committed to one day having a hearing that does not go 3 hours, but I think this conversation is not the day. It's an important conversation. It is on the top of the mind of so many people. And so I sincerely thank you for being here, for being avid listeners to this conversation, for the work that you do on behalf of the City of Boston, and for your commitment to creating a more, a city where we can house our Black and brown residents and do the work, hard work that it's going to take to get us there. So I'm just going to turn it over to you, Karen and Bob, for opening remarks, and then we'll turn it over to my colleagues for questions.
Okay, great, perfect. Well, first of all, thank you. Thank you to the panel. It was very well worth it. It was not wasted time. I think this is a very important topic, not only for us as a city, but also as a community, as I'm also a resident of Boston, right? And I came to this country in 1992, and I faced a lot of the barriers for home ownership. And this is where my passion is, really. This is really helping City of Boston residents to go over those barriers, right? And increase our community for low-income families and home ownership. So, but first of all, I really want to acknowledge you and thank you so much for hosting and sponsoring this meeting. I think it's really important for us and for the city of Boston. So, Councilor Lujan, Councilor Fernandez Anderson, Councilor Buck, Arroyo, Breeden, Coletta, Flaherty, Lara, Mejia, Murphy, Worrell, and President Council Flynn, thank you so much for this hearing. Really appreciate it. So I am Karen Rabasa, Deputy Director of the Boston Home Center, the Homeownership Division of the Mayor's Office of Housing. I have some brief remarks focused on providing information regarding our current homeownership programs, especially with the concerns listed in the hearing order. The Boston Home Center has been at the forefront of helping Boston residents purchase their first home, and we also work to help Boston homeowners to stay in their homes through a range of programs. Although the Boston Home Center hasn't received direct complaints regarding fair lending and appraisal discrimination practices, we acknowledge that these practices of discrimination might still occur due to the unconscious biases or intentional actions by lenders or appraisers, which can be significant negative impacts to our constituents and our communities. Data across the country still shows significant racial homeownership gaps for BIPOC households. The Boston Home Center operates several programs with the goal of increasing homeownership rates in the city of Boston for low and moderate income households and households of color. Our homeownership programs identified into 3 categories: financial assistance programs, technical assistance, Mayor's Office of Housing's affordable housing lottery, and assisting buyers with affordable units, including resales, education, counseling services for first-time home buyers and Boston homeowners. As part of our efforts, Boston Home Center does take a closer look at loan approvals, denials, and interest rates to detect any disparities. We currently work with a diverse group of lenders, currently 17 lenders, which 12 have become One Plus Boston. We did start with 4 lenders, and now we are up to 12, which is a great number. And we continue to engage lenders to become part of this, the One Plus Boston. One important commitment that we have in the Boston Home Center is to always work with our lending partners, making sure fair lending practices are being performed on behalf of our constituents. Our data shows that from July 1st, 2020 throughout this March 17, 2023, we have assisted 391 first-time home buyers. 200 were used the One Plus, 298 used the One Plus Boston, and 98 were assisted with the traditional financial assistance. Of those 391, 256 were BIPOC households, and from those 256, 156 were Black households. In our constant work with lenders, we ask for transparency in the lending and appraisal process. We ask lenders for diversity in the workforce, and we ask lenders to regularly monitor their lending practices to identify any potential discriminatory practices. When working with buyers in both the financial assistance program and our affordable housing sales, we review buyers' mortgage products to ensure the buyers are in an affordable, sustainable mortgage product. On the home buyer side, our classes are designed to educate first-time home buyers about the home buying process and provide them with education and guidance about first-time home buying mortgage products and raise awareness of fair lending practices so they are informed and knowledgeable about how to avoid discrimination. Our goal is to provide these first-time home buyers with the knowledge and confidence to get the most affordable and sustainable mortgage and to make informed decisions about mortgage products and the lender they might choose to work with. But unfortunately, there is still so much that we have to do to combat discrimination in lending and appraisals and promote fair and equitable access to credit and housing for all members of our community. The mission of the Boston Home Center is to help and support Boston residents to become and remain successful homeowners in the city of Boston. Thank you.
Thank you. Bob, you now have the floor.
Okay, well, thank you
Sorry,
very much.
Director Terrell. I can be informal, but Director Terrell. Yes. And thank you, Director Rabaza.
Well, thank you very much for this invitation from you and the rest of the committee. As you know, I'm new in my role at the city. This is week 11, but I am not new to the issue. Unfortunately, as the many reports that have been cited here today have indicated, redlining and bank discrimination go back many, many decades. I was reminded of the fact as I was going through some of those documents in preparation for this hearing that I read my first redlining study in 1975. And it focused on what we now call redlining and greenlining as it occurred in the South End in the aftermath of urban renewal, where African American families were unable to access credit of any kind from banks at the same time that the neighborhood was being gentrified and the gentry was able to access loans to buy in our community. So I've always had a strong association between redlining and bank discrimination, urban renewal, and displacement, because it all took place at the same time in the same community. The studies that have been cited today are very important. They show a long and lengthy historical trend line of lending discrimination. But I think the issue that confronts this committee today is what can the city of Boston do to address this problem head on? And I have some recommendations because the city of Boston, as you well know, is not a bank regulator. But we do have some tools that I think we should use and use more aggressively. First of all, the Fair Housing Commission itself, we are what is called substantially equivalent to HUD. Now, what does that mean? It means that any person that files a fair housing complaint with our commission, whether it's over rentals, sales, financing, insurance, we can provide them the same remedies and the same protections as the federal government, as HUD. Whether it's a complaint that was generated by an individual, a complaint that came to us by way of testing, whether that's a complaint referred to us by the federal government, or whether we as a commission have done our own research and engage in what we refer to as a commission-initiated complaint. And we can provide a lot of the same remedies: compensatory damages, a civil penalty, which is a fine paid to the city of Boston on behalf of all of our protected classes in the city, legal costs, and we always insist, as a part of any order or any settlement, that they undergo fair housing training. So the council should know that any resident in the city or any person who knows of a discriminatory act can file a complaint with us, and we will follow that complaint to the full letter of the law. I think it's excellent, and I want to agree with all of the various ideas and reforms that were expressed by the previous panel. I think they laid out an excellent foundation for attacking this problem. But I also think we have to hold people who break the law in discriminating against our residents accountable for that to the full extent of the law. I think they presented many of the carrots. I'm presenting at least one of the sticks. Secondly, I think under our linked deposit law, there are some opportunities there for greater leveraging and greater enforcement. There's a section in the linked deposit legislation that's referred to, what do they call it? They referred to that as conditions upon which a bank is chosen to be a city depository. It's referred to as pledges that the banks make to the city of Boston. I don't think they should be pledges. I think they should be requirements for being a city depository. And some of those requirements are around community investments. Even in the RFP that goes out asking for people to participate as city depositories, we should put language in there to make it very clear what we expect of them as city depositories and how they're going to treat residents of our community. I think we can put in language, there is language around bank products. Some of the ideas that you have heard here from the previous panel speak to what some of those bank products in fact should be. Now keep in mind the linked deposit law, and I remember many years ago testifying in this chamber in favor of the linked deposit law that was sponsored by Councilor Salerno. It only applies to those banks that have agreed to become city depositories, but I think it would set an example for the rest of the lending industry, both banks and perhaps even private mortgage companies, as to what we expect if you're going to do business in the city of Boston on any level. For example, much has been made of the 1 and 1 plus loan. I believe, and Tom Callahan can correct me if I'm wrong, I believe we used to call it the soft second loan. That's how far we go back. But what if we were to say to any city depository that as a condition of being a depository, you have to participate in that program? We should be using the leverage we have. If a bank wants to be a city depositor, we should use that leverage to get some of the reforms we want in the banking industry. There are also, and I have many other examples of where in that legislation I think we need to have stronger amendments and changes to really modernize and update the linked deposit ordinance. There's also some policy areas that I think the city should delve into. It's already been suggested that we do something around credit unions, perhaps more local savings and loans and cooperative banks. And as the previous panel indicated, they're not perfect. But I think if we as a city begin to encourage more local, the development of more local lending institutions that keep money in our communities. One of the unfortunate weaknesses in the Community Reinvestment Act, it doesn't say, there's an interesting imbalance in how banks operate. They take our deposits from our neighborhoods. We take a risk by putting money in those institutions, as we have recently seen with the Silicon Valley situation and with the banking collapse in 2008. We, as consumers, take a risk putting money in their banks. But then they turn around and say to the very same people who have put money into those institutions, we're not willing to take a risk on you by lending to you. That needs to change. The whole definition and discussion that we had on risk needs to change. Why should we continue to take a risk in depositing in their banks if they're not willing to lend to us? What does that suggest that we should do? So clearly, we need to be thinking about future alternatives. There's legislation pending in the state legislature right now. It's been refiled to create a Massachusetts state bank. Will that bank be participating in the mortgage market? It's not clear so far from the discussions that I've heard. It's not clear if they're going to engage in mortgage lending or not. I would encourage them, and I would encourage the city to encourage them to do so. There's also a state-linked deposit law, the same discussion that we're having here today about our linked deposit legislation. Perhaps we need to have with the state. Where is the state putting its money, and under what terms and conditions, and with what results? There's also, as a part of our division of banks, a little-known entity referred to as mortgage review boards, where people can appeal a decision that's been made to deny them a mortgage. How many of our residents know about mortgage review boards? Are those mortgage review boards, from an enforcement standpoint, strong enough to really do the job? Maybe we need to think about legislation to give them broader authority as, once again, another mechanism for challenging the devastating denial rates that we see in all the studies that we have available to us. Last but not least, Madam Chair, I have a recommendation specifically for the committee. Before I do that, the Municipal Banking and Community Reinvestment Commission, which is created by this linked deposit law, really, I haven't seen any evidence that they are meeting or that they have been called together as a group. I think it's time.
That's one of my questions for you, actually. So thank you for elevating it, and I'm glad that you got to. I was just making sure with my staffer that we were, so thank you for.
We need to reactivate that commission. I believe the City Council has 2 seats on that commission, appointed by the President of the Council. I don't know which 2 the President would appoint, but I have my suggestions if the President asked me. We need to get that commission up and running, because that would be an excellent mechanism for reviewing at least the work of city depositories. A recommendation for the committee itself. I recommend, Madam Chair, that at the end of this session, you not adjourn the meeting, that you instead continue this hearing by recessing the hearing subject to recall by the chair, and that you reconvene this hearing out in Boston neighborhoods to get testimony from consumers, from homeowners, from small business owners as to their relationship with both banks and mortgage companies. And that you also think in the future of inviting the city treasurer, who is the author, or at least the somewhat author of that document, that we invite the State Division of Banks to talk about mortgage review boards, and that we further invite all of the federal bank regulators that are here in the Boston region, the Fed, the FDIC, the Office of the Comptroller of the Currency, the Office of Thrift Supervision, that we bring them all before the council to talk about lending discrimination, what's going to be taking place with these new regs that are coming out around CRA, and what is their intention for enforcement, and perhaps even improvements to the Home Mortgage Disclosure Act so we can get even better data. In closing, I really suggest that this council take the leadership on this issue and really push and make it a point to make lending discrimination in all of its various forms absolutely illegal in this city, and that we take all measures necessary to enforce all of our civil rights and fair housing laws with regard to lending discrimination. I'll stop there. I have other comments I'd like to make, but I'll stop there.
Thank you,
Thank you.
Director Terrell. I appreciate your testimony. And when you were giving instructions on how to proceed, I'm like, okay, you should get one of these city council chairs. So I appreciate you. I believe I said at the beginning, this is by no means the last hearing that we're going to have on this. This is going to remain in committee, and we will continue the conversation. I did invite the Federal Reserve here, but as I stated, they're for their own compliance rules, they're unable to make today's hearing. We will get them at another hearing to be part of this conversation. I take all of your points to make this a conversation that includes regulators and the practitioners. I also invited banks, and they also were not able to make today. But I appreciate all of your comments. You know, top on our list too is a Municipal Banking Commission in terms of seeing where that is and how we can get a review of the linked deposit ordinance. And we also did invite the city treasurer, was not able to make today, but we'll work to make sure that at the next meeting, the next hearing, she is present. So thank you, Director Terrell. I'm going to turn it over to Councilor Bach to see if you have any questions for either directors.
Sure. Thank you so much, Madam Chair, and thank you to you both. And Director Terrell, obviously, it feels silly to say welcome to the City Council chamber because I think you spent a lot of time here over the years. But is this your first appearance since taking on the role on the panel?
Yes, it is.
Yes. So thank you. So welcome in your administration role to the chamber. That's fantastic, and we're really lucky to have you over here on the City Hall side. So just a couple of things. I mean, one was just like, I really appreciated you speaking to the Fair Housing Commission and sort of the enforcement tools that it has. Because I often think, you know, as legislators, I think we often struggle with the balance between things where what we need is something new on the books versus things where what we need is more sort of robustness breathed into the institutions that we already have. And so often we've struggled with so many of the same issues over the years in Boston that we might have something on the books like the Banking Commission, which isn't meeting, or like the Fair Housing Commission, which is meeting and doing work, but which I think, as you were alluding to, we need people to know more about. So I wondered if you could speak a little bit to, from your office's perspective, sort of what, besides obviously speaking to us about it here, like what you guys are doing to kind of get the word out and make sure that people know and make the commission able to be that more like kind of effective, substantial equivalent to HUD.
Well, my first order of business, having started on January 3rd, was to immediately dive into the budgetary process and filling vacancies and putting together a new staffing pattern for the commission. So I have been knee-deep in that. I will be visiting this chamber again after the second Wednesday in April at some point to plead my case. But one of the things I made clear to the administration before I joined, I said the Fair Housing Commission must have two very important things in order to carry out its mission. One, we need our own in-house testing program. So I was really glad to hear people from the previous panel raise up testing and fair housing testing. As a former director of a FIP agency, we had our own testing program. It was, in fact, Whitney Demetrius was our director of testing. And she personally handled over 1,000 match pair tests while she was working at our agency. And I said, we need that because the Fair Housing Commission, whether we're looking at a rental situation, sales, or a bank or finance situation, we're working with circumstantial evidence. What we need is more direct evidence, which would make our investigations more robust and drill down into the real details of a transaction. And the best way to get that is through fair housing testing. And there is a Supreme Court case that was decided many years ago that said evidence generated by testing is admissible in a court of law. So we have an actual constitutional ruling from the Supreme Court in that regard. So hopefully, through the budgetary process, if it turns out the way I'd like, we will have our own in-house testing program for all types of fair housing issues. And one of the things about testing is obviously we test for all protected class issues, so we need all sorts of people. We need the most diverse group of folks ever assembled because we're going to be testing for everything, all kinds of discrimination. And secondly, I have requested, and I know this is somewhat controversial, and I'm gearing up for the debate on this, the commission needs its own general counsel. It needs its own in-house counsel so that we can move quickly and swiftly on fair housing cases and, if need be, go directly into court and litigate. I have the utmost respect for a corporation counsel, but oftentimes we need to move very, very quickly for subpoenas, temporary restraining orders, any number of things. And I realize corporation counsel is trying to deal with the requests from 54 city departments. And it would be most helpful to our operation. And I've already made this request of the administration through the budgetary process, so this is not something that is a secret. But I think it would greatly enhance what we're trying to do at the commission, and it would be very helpful to have our own general counsel. Other than that, we're moving as quickly as we can to fill all our vacancies, so hopefully by July, we'll be fully staffed and ready to go.
That's great, and I'm so glad to hear all of that, and especially about sort of the push for in-house fair housing testing. You know, the council over the last few years has supported substantial funds to your office, I mean, before you were here, in order to fund testing, but obviously we've been doing that with outside partners. There's actually a good, if you ever have a lonely night, if you haven't done this already, we did have a good hearing on this in the last council session. So it was, I think there was a docket co-sponsored by myself, Councilor Edwards, and Councilor O'Malley about fair housing testing, and we kind of dug in. And I think one of the things that came out of that for me was, well, we've had a fantastic partner in Suffolk for the city to really like do what we need to do like consistently, and also, you know, test all those different categories. And maybe that means that for some period you're focusing on one category and then you're flipping and what, you know, like we kind of need, it can't be this one-off thing where we're funding like external RFPs kind of at moments of everyone noticing the problem. Like it has to be a kind of consistent thing. So really glad to hear you chasing that. And obviously, yeah, all categories. I mean, one of the things that I recall in the data from a year or two ago was like there's enormous discrimination against particularly transgender folks, but the LGBTQ community as well in housing. And so, you know, there's a lot of different protected classes. And as we all know, families as well, especially with the older housing stock and everybody not wanting to do lead abatement in Boston, so.
And this isn't a theoretical proposition with me. When I worked at the Boston Fair Housing Commission the first time, this is my second time around, back in the late 80s, early 90s, we had our own general counsel and we had our own in-house testing program. So I know from direct evidence and experience how effective it can be and really bolster the kinds of investigations that we're doing. With regard to fair housing testing around lending issues, that is a special sort of art and science in and of itself. But we have worked out in the fair housing world a methodology for testing banks and mortgage companies. So it can be done. It's a little bit different from the methodology we use around rental housing, but it can be done. It was just done recently by the National Community Reinvestment Coalition in Baltimore. That's how they brought 2 cases to HUD around appraisals, is that they put together a testing regime specifically to go after appraisals around the protected class of race. And those 2 cases are now pending at HUD, and we're anxious to see what kind of administrative law comes out of that.
I want to let my colleague, the chair, get back to her question. So I'll just say I want to echo your view on the link deposits, municipal banking commission. I think it's well past time to kind of revive and strengthen that, and also thank, because they're still here. Tom Callahan and Maha have been banging that drum for a while now, and so there's definitely been some external advocacy also asking the city to do more, and there's been some good work. I think we had Drew Smith, who was here in the Walsh administration, did some good work on pushing some of those folks on our deposit and getting some good reporting back, but it was all still internal in this way that doesn't help us to do exactly what you were describing, to set an example and say these are the standards of the city of Boston. So I think there's real opportunity. And I'm sorry, Karen, that I didn't ask you any questions, but I really appreciated your statement. And I guess a question, but you can roll it in with Councilor Lee-Jones or whatever, but it for you would just be like, one of the things we heard from the prior panel is that, even as we funded all these programs, there's just this fundamental supply crunch. If there's any more that you can say about kind of what you're seeing firsthand in terms of what feels like the most frustrating aspect of all this for our first-time home buyers, our first-generation home buyers, and what's the next piece of the puzzle for you, that would be helpful.
Yeah, so right now we have, our programs are great. We changed from being at 0% loan, we went to a grant. So we're really trying to build equity there for our homeowners. We are gonna be increasing our interest rate by down for the 1+ Boston, so we're already working the mechanics with the lenders, and we're adding more lenders into the pool, and get more people pre-approved. In our office, I can tell you, we have even expanding. We had to expand our bodies, our staff, because of so many pre-approvals we're getting for home purchases. But it doesn't matter how much we have in assistance when there is really no enough inventory or affordability for our constituents. And that's really one of the things that we're seeing that is becoming a barrier, and it's pushing Boston, it's pushing residents to be out of Boston. So we do need more inventory, more affordable inventory. Our average home price from buyers that we have served, it's about $398,000. So it tells you that, hearing Tom's numbers on the average home purchase, it's a big gap, and it raises concerns for our community, because our average low to moderate income families are between 74 to under $100,000. So, and I'm also hearing his numbers, and it is concerning, because it doesn't matter all the programs that we have, we are facing for something bigger, that it's not affordable in Boston, and that's what we're seeing.
Yeah. And just the one thought I had that might be a follow-up question through the chair is just to try to understand, we have asset limits on folks who qualify for our first-time homebuyer programs and such, and it makes sense because we're trying to build wealth amongst folks who don't have wealth. I think we have a higher one if you're like a senior, because we know that seniors have to have saved for their medical needs and all of that, but I think it's kind of like one or the other. And I guess one question that I have, again, it's probably like a comeback data question, but just when was the last time we looked at those numbers, and are we thinking about, what I don't want is that the homeowners who we could support, who are in the income bands we're trying to support, who are kind of on the cusp of being able to afford the slightly more expensive houses, have managed to save a little bit more than $75,000. And then I don't think there's a ton of people in this box, but it's awkward if there are people in that box and we're saying, oh, now you're out. But actually it's that ability to put some larger down payment down that would help them to get the houses. So I've just been thinking about this because some folks were talking about, the waiving contingencies and cash offers and the scale of down payments that people are putting in the private market is just out of control. And so, we have to keep coming up with products that help us compete with that. But then also how do we, just how do we make sure that we're thinking about who's engaging in the market right now?
It is interesting, because that was a conversation that we were having yesterday with my team, and that's something that we're taking back to MHP, of course, to revision of that asset test. And from the City of Boston perspective, We really look one-on-ones in cases where if you are over assets for some reason, we look at your case. So it's like, we don't really say no. So just to give you a peace of mind, we really look, and, you know, it's building wealth, it's really helping. We do more than, we try to go above and beyond on the needs of homeownership in our constituents in the city of Boston.
Thank you. Thank you, Madam Chair.
Thank you. Thank you, Councilor Bach, for your questions and for your participation. There's a 2 o'clock hearing, so I want to just thank City Council staff, central staff for just their diligence and always being present to make sure this goes along. 2 really short questions. Director Terrell, support bringing testing in-house. I think that is the way to go. How many full-time employees are we talking about that you're requesting?
1.
Just 1.
Just 1 to start.
Listen, we got you on 2. Like, you mean,
I'll take 2.
You mean, if you want to put that in, we're here to support that request.
That would be very generous and very helpful.
Yes, I'm being
Thank you.
honest. And so if that is, you will have my advocacy from here. And I will also say that you also have my advocacy on what I know is an uphill battle to get general counsel. And I think one of the reasons why folks aren't turning, right, they face discrimination, they feel that discrimination is happening. They don't come to the Fair Housing Commission. It's like, how long is it going to take? Is it going to take forever? Am I going to be able to get some sort of resolution? And if we have someone in-house who's able to be responsive, that could be really great. Because I think that sometimes our residents just feel like what we have isn't working. Not only are we not putting information out there about what exists, we're not saying like, hey, making it obvious that if you face discrimination because you're black or because you're queer in the process of buying a home or in the process of renting, we have an entity that can support you and that can be quick in responding. So I appreciate you uplifting that. I have a question for Karen, for Director Rabaza, is whether the Home Center provides home buyers with training on how to identify discrimination and on what to do in the home buying process and what to do if they do face discrimination.
So in our first-time homebuyer classes, we do talk to them about the Fair Lending Act. And we starting to do workshops, and that's part of one of our workshops. We also attend the sponsored first-time homebuyer classes, just to talk about the programs, but also to see what lenders are doing when they are training. In the past, before coming to the City of Boston, because I'm also back in the City of Boston, this position of the past 3 months, I also serve in the CHAPA Commission, and I reviewed a lot of the first-time homebuyer classes, particularly lenders, and see how they will talk about the discrimination and how to trigger discrimination or how to. So that is something that I'm bringing up into the Boston Home Center. This is my 3rd month in the Boston Home Center, so it's something that we're taking very serious, and it's going to be more in a workshop that we're working towards.
Thank you, and I think that there's potentially good synergy between the 2 of you and the 2 of your
Yes.
offices on how you all can work together. And so
Absolutely.
you're welcome. You're welcome.
Thank you. Absolutely.
So, yes, I just want to thank you for being here. This is obviously an important conversation that we didn't start it, and we probably won't finish it, but we're going to work on it. And so I want to thank both of you for being here. Next time we will have the CFO, the city treasurer, to really dig deep. We'll have federal regulators, and hopefully we can move the ball forward. You know, this is not, we have a big problem, and we need to be solving it from all the different angles: production, preventing the discrimination, making it easier via 1+ Boston. And so I thank you for your participation. We had an excellent panel of experts and advocates who were here, so I want to thank them and for still being here and for all you do to push us and to hold us accountable. I want my sisters and my neighbors and people I grew up with to be able to buy homes here in the city of Boston, for them to be able to return to Boston to buy homes, for them not to be priced out, for them not to feel like I did when I was buying my first home. Is this happening because this is a legitimate question, or am I facing home discrimination in the process? And me as a whole lawyer, as a whole attorney, have those questions. And so I can't imagine what someone without sort of the ability to attack that power asymmetry that sometimes presents itself, to be able to ask those questions, to be able to turn to a MAHA to see, you know, is this normal? Is this what should be happening? Our buyers and our hopeful buyers face a lot of hurdles. And so I thank everyone who's doing the work to sort of dismantle those barriers, and just, commit to being part of the solution. So this docket is going to remain in committee for the work that we have to do and the conversations that we have to continue around linked deposit, around the Municipal Banking Commission, around so much more. But I thank you all for being here and for being part of the work. This meeting is adjourned.